All right, welcome everybody. Welcome to Talkin Investing. You're here with Tom and George. We're a few minutes late. Our apologies, but this week was pure insanity. We have a lot to talk about. We have a 100-year record that was broken. We've got a big announcement from one of the Bitcoin miner data center companies. We have CPI, a long list, George. What's going on?
Why do you always turn it to me like I know what's going on? If I knew what was going on, I wouldn't probably be doing this channel.
All right,
Tom? A lot of I don't know. Did they start talking about crypto today? They were supposed to a big thing, 17th.
Well,
Senate.
We'll talk about the Clarity Act. I'm getting less and less hopeful. Maybe we'll see what you guys think. Polymarket, the prediction markets, is getting less and less hopeful. But we've seen that fluctuate before, so we don't know. We'll see.
Oh, you want me to do my normal?
You're
Is that what you're trying to get me to do?
You
finished this week down approximately 1.6%. That's crazy. Dow dropped 2.9%. This is just not good. The Russell
gets worse.
0.5. Do I want to keep going? And they even said Meta was down.
Meta was down today. We're going to talk about Meta. We're going to talk about, I got a few important topics on Meta and some brand new, what I'm going to call FUD has come to the market again regarding Meta. So we're going to look at that.
Monetary policies are out at crossroad. He said that George was probably right. I need to lower interest rates on Monday. Can you believe he called me out?
I can't believe it.
Oh, do you think they're going to raise rates, Tom?
No.
Is oil ever going to get under control again?
Yes.
You think so?
This is the speed round.
And AI's spending faces its biggest test. I'm hearing that somebody was saying that Meta is out of money. Meta
is spending a lot of money. We're going to go through Meta. They're doing a whole lot of things. And they actually had a down day today, but they have been front and center for the last 2 weeks, and I think they have been the catalyst for the monumental, what we're going to talk about. I don't want to use the word catastrophic, but we pretty much fell off a cliff in the AI stock world, and we're going to look at some numbers. I'm going to show you guys what happened yesterday. Yesterday was a nightmare, and today a little better. You know, a step in the right direction, and we're going to have to see where we go from here. That's going to be the big topic of conversation. We had some stocks do things this week that I've never seen before in my life. We have some pricing. I'm going to walk through the AI trade, kind of the whole process and who's involved and what they do and what discrepancies are going on, because there's some discussion out there. There's some talking points that I must not get the memo. That's all I can tell you, because everybody else says the exact same thing, and apparently nobody is giving me that memo. And I think that they are. I think they're wrong. So I'm going to tell you what I think about it, and time will tell. We'll see. I think this is what you have talked about time after time, George, for years. This is manipulation. They are bringing the pain. It's on purpose. It feels real. And that's how people sell their stocks. Retail investors lose money. And it's exactly this setup that's happening right now that makes that happen. And if anybody, drop in the chat desperation, if you felt desperate at any point this week, because
I feel desperate right now.
This was, they're doing their thing. All right. Sour Melon Gaming said, Fed said 0 cuts. Tom, don't leave YouTube. I still think the Fed will cut rates. In fact, I have a high probability to that. I would be still shocked if the Fed did not cut rates this year. And we're going to go through what the market is pricing in. This is another memo apparently I didn't get, because the market is pricing in a 0% chance of a rate cut this year, which is, if you want, we're going to talk about that for sure. And this talk of a rate hike, in my opinion, is pure FUD, and it's pure fantasy. They're gonna hike rates. I can't finish the rest of that statement. I believe they will not hike rates.
I'm beginning to think that no one knows what the F is going on.
That's what they want. This is exactly what they want. They want you to wonder what is going on.
I mean, did my vote count? Didn't my vote count? There's pandemonium on the streets.
It's pandemonium. Your vote counted, as far as I know. Trigger warning, we're talking about voting, in case anybody needs a safe space. And if you don't need a safe space, I'm going to get to Gambit Beer in just 10 seconds. But first, wait a second. Wait for it. If you could please smash the like button. We need all the likes we can get. Our last couple of streams in a row have been not gotten the likes that we need to reach critical mass. So we got to get out to people. We got to get the word out. We got to smash the like button. Do us a favor. If you're new here, if you've been here all along, and I see a lot of members in the chat, and I see a lot of longtime subscribers as well. So help us get the word out. There's a lot to talk about. There's a lot going on. And I'm just telling you right now, this is one of the most dangerous markets to navigate that I've ever seen. And it's not the only one in the history of time. I understand. For those of you old enough, you went through the 2009 financial crisis. For those of you a little older than that, like myself, you went through the 2000 .com bubble. For those of you really old like me, you remember the 1987 Black Monday. I don't think any of us remember the Great Depression at this point, so that's as far back as I'll go. But listen, I know this is not the first time it's ever happened, but this is one of the top 5 most radical stock markets we've had in the history of the stock market. It's doing things it's never done before. There is a blue chip company that had their worst day in 115 years. This is what I'm talking about. First poll. So, okay, let me get to Gambit Beer. Sorry, George. Gambit Beer, member 46 months. Thank you very much, Gambit Beer. Perhaps it's time we all revisit Bitcoin as an investment. It's pretty solid recently, especially considering Saylor selling. So I want to talk. Thank you, Gambit Beer. I want to talk about Bitcoin. We're going to talk about where we are, what we think is next. I want to talk about Microstrategy because their CEO, who isn't Michael Saylor anymore, Michael Saylor is the chairman of the board, and he's basically the Bitcoin ambassador. Their CEO said something very interesting that I think is settling markets. Their situation, I believe, is stabilizing, but they've got a ways to go, and it hasn't been pretty. For those of you, for the members, and those of you who have been here, you know that I got out of strategy, stock ticker Microstrategy, but name strategy, and because it just broke a line of support that was brutal, and it really hasn't gotten back up to it since then. I suspect it ultimately will. I just didn't know how long it was going to take. And we'll look at Stretch as well, which is their preferred stock, which is really the much bigger part of that story. But to your point, Gambit here, we got to talk Bitcoin for sure, and we will.
Well, what's amazing to me is we're only at 2.1-ish trillion in market cap for crypto, which just blows my ever-loving mind. Who thought we would be here in July of 2026? I don't think anybody did. At least not on the stream. Maybe. Tell me if you did.
I know that I didn't. I know that you didn't. We know that Bitcoin and cryptocurrency is very volatile, but this was all so far. I will say, I think it's hard to argue. This last cycle was disappointing, and if this is going to be, if it's going to follow this trajectory on a diminishing returns standpoint, then that's going to be a big problem. So I think something different than that is happening. I don't think Bitcoin is in trouble. We're going to get to what I think, but if you look at what happened in this last cycle, first of all, a lot of things were very different than previous cycles. I know there's a few data points that remain the same. Most of all, there is the potential that the high was at roughly the same point as in previous cycles. And if we don't get a real bottom for another 3 or 4 months, then the low will have been at the same point as in previous cycles. So those are two important data points, but the high got nowhere near as high. First of all, we got to a new all-time high a year early this time. The ultimate high got nowhere near as much of a percent up as we've had, and we have had nowhere near as much of a pullback as what has been, referred to in the past as a crypto winter. Now, the altcoins are in a crypto winter. Ethereum's even in a crypto winter, but Bitcoin is nowhere near the drawbacks it's had in every previous cycle. Now, a lot of you may think, and there's still, I think the majority of people looking at 48,000, 42,000. I've heard people talking about 35,000. I'm not in any of those camps, but I understand, that's still probably a majority of the people out there are feeling that way about Bitcoin. And Bitcoin's getting, pushed and pulled by a lot of geopolitics, by we have the largest trade in the history of the stock market. So this is something that I think people are going to come to understand. We're in the middle of it, and we're comparing it to previous things. Like I've heard many comparisons, and I'll quickly. We've talked in the past on why this is not the .com bubble, but there's been a lot of comparisons. You will hear that all the time. This trajectory, we're on a .com bubble trajectory. I'm going to give you some basic reasons why it's literally nothing like the .com bubble. And here's the biggest way it's nothing like the .com bubble. There's 20 companies that just that one company added more market cap than the entire stock market did in the .com bubble. That's how many magnitudes bigger this is than that was. So we are in a different time. This is a different market, and we got to look at valuations and try and understand. I think it is taking the market. That's not a fair way to say it. The market is not adjusting how they're looking at certain companies. And I was going to say I think it's taking them a long time to catch up, but I don't believe that's actually what's going on at all. I think they know exactly what's happening. They're more than caught up. They're ahead of everybody, and they're selling a false narrative to scare everybody out of all their stock. And by the way, it's working. Retail investors ran for the hills this week. So was that capitulation? Was that enough pain? Is there more pain to come? I mean, you would think if you looked at the charts, and I'm going to show you some charts. It's dramatic. You would think AI is dead and like it was some kind of hype thing that's just not happening and it's never going to happen. That's the way the stocks are being traded, particularly a lot of the stocks that we follow that are on our list, the former, what we once called Bitcoin miners, that are now a combination of Bitcoin mining and data centers, and some have just abandoned Bitcoin altogether. We're going to talk about one of those that basically announced this week they're out of Bitcoin mining, and they're not the first ones. So, you know, that is a trend that I think is going to continue. We're going to look at the Bitcoin network, and that's an important thing to look at. And this is the worst year in the history of the Bitcoin network, and it's about to potentially get a lot worse. And that sounds like a bad thing, but the reality is it had run up so dramatically that it priced, the difficulty level goes up. As the Bitcoin network gets bigger, blocks get solved faster. And I don't want to reteach this from the beginning. I know the vast majority of you understand this completely. The more compute power there is, the faster the average block is solved. And when that happens and that average gets under 10 minutes, approximately every 2 weeks, the difficulty level is adjusted and it becomes more difficult to mine a block. Now, the reverse happens. If it starts to take more than 10 minutes, 10 and a half minutes, 11 minutes would be an outlier. I mean, it doesn't fluctuate that much. Then the difficulty level will come back down so that it can stay on pace, because Bitcoin has a certain pace. It wants to average solving a block every 10 minutes, and it wants to average that not over a 2-hour window, over a 50-year time period. We want to be able to look back and say, yeah, we were, 0.1% away from, a block being solved every 10 minutes. And that can be accomplished by adjusting the difficulty level every 2 weeks. Well, if this holds, we're about to have a historic reduction in the difficulty level, and it's already dipped the most it's ever dipped in history. Having said that, it's a very big network. It's the biggest network on Earth by far, and we don't need the network to double or triple or quadruple. It's overkill beyond belief, and what happens is it destroys the Bitcoin economics. A Bitcoin miner cannot make money at these difficulty levels and at these prices. So it's not just the price, it's the fact that the difficulty level, while the price didn't do what it was supposed to do in previous cycles, the difficulty level actually ran up much more than it did in previous cycles. So the economics, on top of all of that, right, the reward gets cut in half. And we're now more than halfway to the next halving. So the reward's going to get cut in half again. Had the Bitcoin mining network continued to grow at the rate that it was growing, and we had another halving, the break-even point to mine a Bitcoin was going to be about $250,000 2 years from now. So it did not continue growing. In fact, it's shrinking. And that's going to make it healthy, and it's going to make Bitcoin able to keep doing what it's doing. But there are, because AI data centers provide what a lot of people perceive as a higher gross profit and a more steady income stream, a lot of these companies are switching from Bitcoin mining over to data centers. Some are doing a hybrid, some are switching altogether. There's one that's not switching at all. Ethan is saying IREN is 10,000 times better than all the other companies. And he said, in my opinion, I will tell you, Ethan, IREN is my number one conviction play. It has fallen down to the level of support that I said I thought would be. I would buy. Yeah, and I'll tell you guys what I did. I did make a few purchases this week. The dip was too vicious not to. But it got to a line of support I did not expect it to get to. I am absolutely stunned. And I know there's a few of you that aren't, because I've seen in the comments people talking about IREN getting into the low to mid 30s. And well, sure enough, it's $33.62 right now. and it was lower than that yesterday. So
what type of support is there at this level? Is this a good support level?
It's right at its level of support. So the members, when we get to that chart, we will look at the IREN chart, and the members are going to remember this exact line of support that I basically said, you know, if things get really bad, I suppose it could go down here, but I think that's highly unlikely. Well, guess what? As unlikely as I may have thought it was, it happened. So I do think this line of support, I can't. This is a $75 stock in my opinion. There's no, they can drive it down to $10 and I will still have the same conviction that it's going back to 75. I don't know how long it's going to take. Market manipulation can last for long periods of time, and it is designed to last longer than your tolerance for it, so that you sell your stock. That is the new stock market.
Well, just remember today's opposite day for me. So with that being said, I think IREN's going down farther.
It could go down farther. I will buy more. I'll let you guys know. I bought options. So that's the play I said I was going to make if IREN did go down to that number. So I did do that. That was my plan. I feel good about it. If it goes down more, I'll buy more. I'm not buying more stock because even with this drastic pullback, and this is not bear market territory for IREN. It's catastrophe territory. We'll look at the chart and you'll see the vicious pullback. But to George's point, it could go down more. Having said that, it doesn't change a single thing about how the company works and operates, the contracts they've gotten, the contracts they're going to get, their proven ability to execute, their pipeline of energy. So everything about that company, to me, gives me confidence. There are others I have a lot less confidence in. So we're going to talk about that too. Welcome, Katie. And thank you. Yes, Katie just reminded us. If you could please smash the like button. We're going for 150 likes. We can.
Do you think there's getting ready to be a stock crash?
I don't. But
it seems to be the news that's out there. Everybody's seeing it.
That is a growing talking point. Oh, that is a part of the .com bubble talk that I'm mentioned earlier. People are saying the stock market's too expensive. There's a few ratios. And I'm sorry for the many people that think this person's the greatest investor of all time. I don't. There's an indicator that Warren Buffett uses, and that indicator is the highest it's ever been, and it's essentially comparing the market to GDP. And this is the most expensive market in history by far, if you measure it using that ratio. Having said that, there are thousands of ways to measure the stock market. And so you always got to take data points in context with a grain of salt and get an abundance of data points and see if they start to point in a certain direction, not just one. And a lot of people will say, well, this one's never failed. This one's right. Well, guess what? Every ratio was undefeated until they lost. It's like boxing. Other than, for those of you who know anything about boxing or care, or even if you don't care, other than Rocky Marciano, which was a long, long time ago, every single boxer was undefeated until they got beat. Right? And sometimes that took 20 years. But none of them. There's one heavyweight in history to retire undefeated. All the rest, no matter how great they were, they lost. And there's a reason for that. And it's time. There is no time catches up to everybody, including indicators. So different things happen. There's so many different variables. And especially, I'm going to shift over to cryptocurrency. We have an unbelievably small sample group. So when people say, oh, this thing's been right 100% of the time. Oh, you mean 3 times? Oh, you mean 5? It's 5 for 5? That's pretty small sample group. I mean, you could flip a quarter and go 5 for 5 heads. That's not likely, but if you try 100 times, it will happen several times. So it's about statistics. Sour Melon Gaming said, I bought a ton of nothing this week. No more spare funds. Already invested 500% more than my max amount. I know the feeling, Sour Melon Gaming. I think a lot of people don't have buy the dip, don't have any more buy the dip money left. And now it's a game of patience. So, I will tell you, I bought a bunch of stocks. I haven't really had to do a lot of this yet, but if I have to, I will. I bought a bunch of very safe stocks that were beaten down, and they're all up 10, 15, 20, 25%. And to me, that was just the same as parking that money in cash. So I consider those cash on the sideline. Even though they're invested, I think they're invested in super high quality companies. But if the opportunity presents itself, these are companies that could go up 30% a year, 50% a year. These are phenomenal returns. But if I see IREN at a point where it's back down to a spot where it's going to 10x again, then I'm going to buy some more. And if I have to sell some of the other, then I will do it. And Waffle said Marciano and Floyd Mayweather, and Mayweather was what was he, a middleweight? One of those cruiser, one of those weight classes that's roughly around a middleweight. Very boring fighter. I won't just distract everybody with that, but to me, the most boring champion of all time. Excellent technician, unbelievably skilled, but very boring fights. And I am not old enough to have watched Rocky Marciano in anything other than rewatches. All right, let's start getting to it here, because a lot did go on this week. First, I want to go to what happened yesterday. This is my list of AI-related stocks. There's 100 more past this, and you can make a list. These are all the big ones. These are a lot of the most popular names. This was Thursday. This was yesterday. I'm going to go to a few. SK Hynix down 13.69%. Micron down 5.65%. Marvell down 8.7%. Western Digital down 9%. We're getting the name of the Seagate down 10%. SanDisk down 12.6%. All of these companies are in the direct supply chain of AI, culminating in the top here, which is, NVIDIA. Most of these roll up ultimately into NVIDIA's stack. And, even NVIDIA was down 2.4%, which for a $5 trillion company is a massive move. AMD down to 500. That thing was on fire every day. Avgo, this is a multi-trillion-dollar market cap company, down 5%. I mean, these are trillion or $2 trillion or $3 trillion companies that got absolutely decimated. And the thing is, every single one of these companies before this happened was already having one of the worst weeks they've ever had. So on top of all that, you wake up and find out, wow, it just got even worse. and in some cases, a lot worse. This is how people sell stocks. Right? SanDisk's down $1,000 a share. You could argue it ran up too much, but we're going to look at some of those ratios later, and I'm going to argue that it did not. And I think the majority of the stocks on this list, this is where people are probably going to give some pushback. I think everybody, I shouldn't say everybody, all the talking heads, every YouTube channel I watched, I did not find one person out there saying buy this dip, which is rare. Usually buy the dip is a pretty common theme. No, this was not that. This was almost to a person, whether they were a YouTuber, whether they were on CNBC or Bloomberg or wherever the case may be, whether it was an article I read. These were not buy the dip scenarios. Everybody was talking about, see, we were right. This stuff's all garbage and it's all downhill from here. So get out while you can. I got an article, and I think the last line is, run, get out of the way while you still can. Cut your losses. Well, I want to know what that person's doing with their personal portfolio, I guess is all I would ask. Ethan saying, why is SK Hynix getting wrecked so hard? I thought they made a lot of money. Well, if you thought that, you would be right, because SK Hynix, Samsung, and Micron are the only three companies on the face of this earth that make high bandwidth memory. It is exceptionally different than all other memory. It is a much more intensive product, and there is not one other company on earth that plans to become competition in this space. It is a 3-horse race, and one of those horses, Samsung, just announced earnings 2 weeks ago. Their quarterly earnings, it was the best quarter that Samsung had ever had in the history of Samsung. But it was actually more than that. It was the best quarter any tech company has ever had in the history of the stock market. The best. And their guidance was that next quarter was going to be better. And their stock crashed. Micron's net income, the quarter that they just announced, was more in one quarter than their net income from the last 3 years all added up put together. So that's 12, their last 12 quarters in a row added up together did not equal the net income of this one quarter. And you could say, wow, maybe it was an anomaly. Maybe there was an one-off accounting thing. No, that was operating income. And like Samsung, they actually, their guidance, their existing guidance was to do much better than the quarter they just reported, which was the best quarter they had ever had in the history of their company. Their guidance was to do better than that, and they could have left well enough alone. But you know what? They said, our guidance is wrong. We're going to crush that. We're going to do $50 billion of revenue next quarter. This is a company whose market cap wasn't $50 billion 18 months ago. That's going to be their revenue next quarter. By the way, they're going to make approximately $30 billion of net income off of that. That's right, in one quarter. These are the best. We're going to have, by the end of 2027, 10 of the 10 best quarters that any company in the entire stock market has ever had in the history of the stock market will all have come from AI companies. The only outlying exception to that is there is a state-owned company, which is Saudi Aramco. That's an oil company. They had a bigger quarter one time. So that notwithstanding, by the end of 2027, the 10 best quarters in the history of the world will all be on this list of stocks that you're looking at right here. By the way, guess who's not on this list? Apple, Microsoft, Meta, Google, They won't make the money these guys make, and I'm going to show you. SpaceX is 10 years from making money, is what the word is on the street. So Tesla's not right. This is what I'm saying. The top 5 other NVIDIA's. Well, we're going to get into that today. NVIDIA's in a tight race for first or second place, and they flipped throughout the day multiple times. They did end the day as the largest company in the world, but Apple passed them several times during the day. I'll get to that a little later, but that's NVIDIA is the only one of the top 5 companies. It's the only Mag 7 company on this list, which means all those other companies that are $2 trillion, $3 trillion, $4 trillion, $5 trillion, none of them are going to make as much money as Micron, SK Hynix, Samsung. It's not what's going to happen. It's what's happening right now. But they're being valued as garbage. And we're going to get into why that is, and everybody has the same exact reason. And, there's new pieces of evidence that they point out to every day. And all I can tell you is Micron is scheduled to make $176 billion of net income next year. Free cash flow of roughly the same, which means that they're going to be able to put more money in the bank in 1 year than Apple has in the entire history of their business, than Microsoft has in the entire history of their business.
Do you think Apple is overvalued?
I think Apple mints money. By the way, we're going to see later, all of what I just said, bear in mind, that is in the context of the fact that Microsoft and Apple had the best year they've ever had in the history of their company from a profitability standpoint in 2025. They are projected and on course to beat that handily in 2026, and their 2027 projections are projected to beat that. So this is going to be 3 years in a row that they have the best years they've ever had in the history of their company, and they're still not making as much money as these AI companies are. And no, I don't think they're overvalued. I think that those are, they're not, sorry to use the word Apple again, but it's not apples to compare Apple to Micron. I understand that. It's not a one-for-one thing. Microsoft, Apple, and a few other companies have shown that they can be a double-digit growth company for every single year for 30, 40, 50 years in a row. Those are special companies. So, I'm not saying they should be valued identically to those companies. What I am saying is they shouldn't be forget different neighborhoods. They're not on the same planet right now. So that is why I believe, although these stocks have had some of the best runs in the history of the stock market, they're just objectively, to me, undervalued. And a lot of people say, well, these things are cyclical. Chips in particular are considered a commodity. They're considered cyclical. When these chip companies in the past have had a good year or two, they revert back to the mean, and they have a bad 1, 2, 3, 4, 5 years in a row after that. The difference is, in this 3-year window of time, they're going to make more money than they have in the entire history of their whole company every single year added up, all put together. They're going to increase their cash position 50x. You're now a different company. You're capable of doing different things. You can't invest $250 billion into expanding your infrastructure to build more chips. That's more chips than get built on the whole earth. So they're going to have money to diversify, to probably consolidate, to acquire, acquire their supply chain and all manner of things. If they just put the money in treasury bonds, they're going to make billions and billions of dollars and obviously that's a ridiculous thing. They're not going to put their money in treasury bonds, but this is what I'm talking about. Huh?
They're going to put their money in Bitcoin.
Bitcoin, that's right. Sourmelon Gaming said, I am shocked almost half the people here think there will be a rate cut this year. So this turned out a lot closer than I expected. Is there going to be a rate cut in 2026? 57% said no. 43% said yes. And I'm going to just go to what the stock market is pricing in. Okay, so in this meeting right here coming up in July, the stock market is pricing a zero. You'll see it's not even on the chart. A 0% chance of a rate cut. 85.6% chance that the Fed will do nothing, and a 14.4% chance that the Fed is going to raise rates. Fed's not going to raise rates. I don't know how to say it any other way. This is not financial advice. I don't know the future, but if you think the Fed's going to raise rates, I want some of what you're smoking.
22 billion reasons why not.
Yeah, more than that.
Weekly. Is that weekly? Is it what we're paying in interest? Or is that daily?
That's
could be daily.
I can't remember if that's daily or weekly, but it's.
Yeah, it was one of the two.
So if we go to the end of the year.
Hang on.
Go ahead.
Is there going to be a 10% pullback in the market in the next 90 days? What else should I add to that sentence? In the S&P?
That's it. That's a correction. Okay. That would be a proper correction. Are we going to have, you can ask, are we going to have a correction? Are we going to be okay? Are we going to have or it's already up? Okay. So we can do that next.
Sorry.
No, that's all right. That's the deal. Are we going to have a full correction here in the next 3 months? Is the market going to have a pullback?
The only reason why I want to say yes is this freaking war. Do you think the war will be over in 3 months? I'm
done guessing the answer to that one. I thought this situation would be long since wrapped up. It's not. Nobody anywhere is happy about that.
I mean, my gut wants. What you told me, my gut wants to say yes.
I'm not going to bias anybody. You guys vote what you think.
I'm saying no. Whoa! Oh, it was 80. It's just coming down now.
So here's the CME Fed Watch tool. So this basically is how the market, this is the probability based on how the market is betting on the futures. And you're looking at, once again, even by the December meeting, which is the last meeting of the year, the market is pricing in a 0% chance of a rate cut. 0.0. 19% chance of no rate hikes. So an 81% chance of a rate hike the market is pricing in. 42% chance that that's going to be 25 basis points. 30% that it's going to be 50 basis points. 8.2% that it's going to be 75 basis points. And 0.7% that it will be a full 1% increase in interest rates. By the way, this scenario right here, you guys might as well have fun this year because we're all done if this happens. So enjoy your year, and that's all I can tell you.
Why do you say that? Because it's just going to be. You're done for the year?
There's 10 reasons I say that, but the first one is if we got to raise our interest rate, we're going to have something like 42 or 43 trillion dollars of debt by December 31st. If we have raised interest rates another percent, we're getting close to the point where we're going to be spending double on interest what we spend on defense. And between interest, defense, and Social Security, we're already going to be negative before we spend $1 on anything to fund the government. We just can't do it. Or it can't be done.
Well, I'm telling you some good news.
The good news is that's not going to happen.
Okay, good.
That's what I'm telling you.
So why wouldn't they go next week and do a 0.25 reduction? I mean, you got enough stuff out there to justify it right at the moment.
They had a horrible jobs report, and they had the biggest beat on inflation that I've ever seen. So, yes, those two things put together is the exact formula to cut rates. Having said that, this is a new guy. He's under a monumental amount of pressure not to act too quickly. And we will see if he's got a mind of his own. We're going to see what happens. The market's telling him.
If he does a 0.25 cut, what do you think the market does?
I think it goes to the moon.
Yeah, it goes bananas.
I think the crypto market goes off. I think the stock market hits new all-time highs. And you'll have a small group of people complaining that was a stupid thing to do.
Not me.
I don't think he's going to do it in July just because the pressure on him is so enormous not to do it. But I do think it's the right thing to do.
Who cares?
I have seen unlike the gloom and doom on consensus on AI and some other gloom and doom consensus, I've actually seen a couple of million-plus subscriber YouTube investment guys say they're convinced there's going to be a rate cut in the July meeting.
I bet money on it, guys. I bet money on it. And you want to know what it pays out for $500? 13 grand.
Oh, you mean you'd literally bet money on it?
Oh, literally, because my whole point was this: if it doesn't happen in July, it has to happen in September, and if it doesn't happen in those 2 months, it's all over for the midterms.
You mean you predicted money?
Oh, sorry, I didn't bet anything. I predicted. Yes,
yeah.
My own fault. Sorry. Not financial advice. We don't encourage bettors. We encourage predictors. Predictors are educated people.
We predict things. Whether they happen, nobody knows. Sour Melon Gaming said, I'm definitely bearish on the rest of 2026. And he said, Warsh needs to grow a sack. We're going to find out. I will applaud him if he's got the guts to make that happen. It's clearly, in my opinion, and I think we're going to do a thing. We did a thing. Do you think there's going to be a rate cut? Now we need to do a poll. Do you think there should be a rate cut?
How much money would save with that little bit? With just that 0.25, how much money would that save for the rest of the year?
It's billions of dollars, but that's not even the bigger thing. It's a signal to the market that we are out of these unusually high. And listen, this isn't 50 years ago or 70 years ago or 100 years ago. A couple of Fed chairs in a row have set a new norm. And that norm is the reversion to the mean for interest. The reversion to the mean for inflation is 2%. That's their target number. Forget what they say. If you look what they've done, they look to get interest rates to 0. So 0%, 1%, 2% has been high. If you look at the amount, as far as the amount of time over the last couple of decades. So this, 3.75% and a possibility of going to 4.5% or 5%, it's catastrophic and it needs to go. So the market needs the first signal that, hey, we're going back in the other direction. That the 25 basis points alone aren't the difference maker. It's the signal that says, okay, we're steadying the ship and we're moving back in the right direction. Remember, everybody just lost their mind. Japan raised their rates to 1%. And that was historic. I think it's like a 40 or 50-year high for them on interest rates. The rest of the world doesn't operate with these interest rates, and we can't afford to. We just can't.
I had a question for you, Tom, and it was an intelligent one. Please like the stream and vote. I really want to know. But if you're looking at this, 77% of people think there's going to be a 10% pullback in the next 90 days.
So that's very, very bearish. Yeah, let's get some more votes before we close that one.
Tom, what did you buy this week?
What did I buy? How many likes are we at, George?
61.
Can we get to 100? I don't want to hold anybody hostage. But it would be nice to get to 100 likes. I'm just saying. I can tell you one of the things I bought, and that is I bought. This is very short-term options for me. I don't get to the point where I get this short-term on options unless things are getting nuts. And in my opinion, things are getting nuts. So I bought September 2026 $40 strike point options for IREN. So that's only a little over 2 months from now. Those options expire and become worth zero. And IREN's now down in the $33 to $34 range. So it seems like there's a long way to go, but IREN at 40 is still stupidity in my opinion. Now, the stock market can be stupid for long periods of time. I don't know if we just lost George. Maybe he'll jump back in. We'll see what happens. Might have lost his connection. But it's what I said I was going to do. I've been planning on this. I said, I told the members, if that happens, I'm buying options. Those are the options I chose. I feel very good about it. I think those are going to make money. That is not financial advice. Those are pretty high risk options, right? 65 days from now, those expire. And they're out of the money at this point. Having said that, to put things in perspective, if we go to IREN, they're out of the money today, but they were in the money on Wednesday. They were way in the money last week. This stock was at $70 2 weeks ago? Sorry, no, 6 weeks ago. So this stock doesn't have to get to $70. I don't expect it to get to $70, but if this stock in 2 months can get back to trading in the $45 to $50 range, those will be a 4 or 5x for me. If they don't get back to 40, they're going to go to zero. So this is what I say. It's a higher risk trade. Obviously, I didn't bet the farm on that, but that will be some nice extra income if those work out. I'm willing to take the risk with the amount of money that I put forth on that one. I did buy, we're going to talk about Micron and the memory chips because I put a bunch of money into that. That was the focus of what I dollar cost averaged into this week. And I can tell you, I did it despite the fact that to a person, every single person that I saw talk about this said, sell these stocks. It's over. So I bought into that anyway, right? Despite popular opinion. But I just, it's the oldest strategy in the book. When everybody's saying A, when it's, you can pretty much bet on B. Otherwise, everybody would be rich all the time, right? If the retail investors are all in total agreement and they're all right, then everybody's going to get rich. And we have not seen the stock market work that way. So now, I did not do that simply to be a contrarian. I did that because over the last 10 weeks, I've spent a massive amount of time dissecting this industry and these companies. And I said 2 or 3 months ago, I said, I think Micron's a $2,500 stock. That's what I think. It proceeded to run from, I was already late at that point, right? It had run from 250 to 350, and it was down at 80 before that. So it had run from 80 to 350 by the time I started dollar cost averaging in. But it ran from 350 straight to 1,200. Now, it's had a big pullback since then. A lot of people think this is a falling knife. A lot of people think this trade is over. It's already overvalued, and you're throwing good money after bad. So I would caution you, that's pretty much the consensus on that. But I'm the opposite. I bought a considerable amount of that this week. So we'll see how that plays out. I will say this as an aside, I feel obligated to point out. Let me just find that. All right. Where did it go? Give me just 1 second. If I can't find it, I'll just say it. Okay, so I cannot find the article. Sometimes that happens to me. Like a month ago. Oh, first let me get to Dan. Thank you very much for the super chat. Much appreciated. George was right. Second half of the year, Bitcoin back to 100K. George is popping in and out. He might be having internet troubles. Thank you, Dan. Appreciate it. And I hope that George is right, and I hope that you're right. I do think we rally the second half of the year. I'm not 100% certain we get to 100,000, but I do think we have a nice second half of the year. I wouldn't be surprised if we got to 100. I wouldn't be surprised if we got past 100. I wouldn't be surprised if we got to 92. Whatever the case may be. But let's go for 100. Doug saying those calls were not cheap. They got more. I don't know what they are now. But yeah, they weren't free. If you're talking about the ones that I bought. My break even, and again, you have to remember, it doesn't really ever have to, the way options work, and their call options, I don't usually wait, and I did do this with one company this year, but it's really the only time. I'm not waiting to convert those call options to stock. I'm waiting at some point in the middle for the stock to run, and for it to get priced, and for the premium to go up on the options and to get paid on them. So it doesn't have to end up where it is. It just has to go back to where, it was. Really, that option needs to go back to where it was 3 days ago. From the moment I bought it, if it had gone back to where the price that it was at 3 days earlier, I would have been big time in the money. So, if you think that company's just, that IREN's just going down, then that's not going to happen. So in other words, IREN doesn't even necessarily have to get to 40 for me to pull a double on those calls, because the premium will go up if that happens in short order. So there's a lot to consider. And again, you got to know options if you're buying and selling options, and short-term option. If you don't know options, I would start with much longer term leap type things, and, crawl before you walk, walk before you run. So welcome back, George.
Sorry, this is crazy.
It's just breaking up.
Yeah. Oh my goodness, it was lightning. It's like all around us.
I
had a question. Didn't Trump say that we just entered the golden age of America?
Yes.
Okay, I just want to make sure I heard that correctly.
Uh-oh.
What
Sorry.
does that mean exactly?
We're saying the T word, everybody. So I'm
not saying it. I'm not saying it to trigger. I'm just saying it.
Listen, we got to be. This is a safe space, George. I'm
just trying to figure out what he meant by that statement. I don't know. We're at 79. You put the trigger warning up. We're at 79 likes, by the way.
Thank you, everybody. You can smash the like button. We're looking to get to 100 and then 150. 150 should be a walk in the park for this stream. Let's make it happen.
We're going back to 100. Thanks for the super chat.
Oh, yes. Yes. While you were gone, Dan was agreeing with you. To put it in perspective, what's happened to IREN, when I say these stocks are getting wrecked, this was June 3rd. It's now July 17th. That's a month and a half later. The stock's down. IREN's down 52% in a month and a half. That's catastrophic. So you can see, I said earlier, it kind of got to a line of support. When we were talking, it was fighting around here, and my opinion was this was going to hold. I said, however, there is a line down here. I don't think we're getting to it, but if we do, I am going to buy some options. So you can see, I didn't wait until the second we hit this line. We didn't quite get to it, but we basically tested this line of support, which was that, if you remember, in late March, the market tanked. It wasn't just the data center chips. It wasn't just the Bitcoin miners. The market tanked. Every stock had a local low on or about March 30th, and then a big run up. So, yes, I understand from the bottom, this thing ran up 128%. That was a massive run up. But, it was pretty much just there in January of 2026. And it was above that in November of 2025. So this stock, to me, this line is a very natural line. This is where IREN belongs to me in the short. This isn't my 12-month price target. I think every day it spends under this line is just a day the market is testing our will and trying to get us to sell the stock, because that's where I think it belongs. And I don't know how long it's going to do this to us. You guys know how this goes. Could be a month, could be a year. I don't know. And James is saying the options you bought, if you got it right, have 135% IV. I feel very.
Let me tell you the other side of that coin. That's just when you get it wrong. Woo, oh my goodness!
When you get an option wrong, you got two choices. You can have a stop loss, and I don't do that. I will ride it out. I put money in I'm willing to lose, and if I got it wrong, I will lose it.
Think about this, Tom. I I was like an Apple believer when it was at 108 to 109. Remember?
Oh,
that
yeah.
was my stock. I loved Apple. And I'm like, it's going to do it. Did it do it? Yes, it did do it. But my timing was completely wrong. My research was right, but my timing was because they are more liquid than you are.
They're right. This is the reason that retail investors lose money. It's too emotionally difficult. It's real stress. People start losing sleep when you've invested money and it's not going well and it's going in the wrong direction. It can feel disastrous. And that's why I say, like, who was having some anxiety this week? Who was panicking? Because I can tell you, I have a personal indicator that is often correct. It's not perfect. Like I said, no indicator is perfect. But a couple of times a year,
whoa,
I wake up and go, I got to get out of this stock, that stock, this stock. I got to reassess my whole portfolio. I got to change everything. I never do it. I stick to my plan. If it works, it works. If it doesn't, it doesn't. But that's what I go through. I'm like, I've got to do. I'm in all the wrong things. Everything I have is moving in the wrong direction. It's all a nightmare, and it's only going to get worse. And oh, by the way, I just watched 20 people tell me last night that it's only going to get worse from here. I'm in a panic. I am having a panic attack. So then
you, Tom?
I do, but then I usually quickly remember, right. I got to buy. This is when I buy. And then I ended up buying stuff yesterday. So, but
would you call this blood in the streets?
Absolutely. When you see what's happened to the stock just went down 52% in 6 weeks. If that's not blood in the streets, and by the way, there's others that have done worse. Marathon feels like it's going to zero. That's all I can tell you. I genuinely, as I got over the rest of what I was thinking about, now Marathon's been on my list for a while. The members know that I actually sold 20% of my Marathon at $14.30 just a few days ago. What was it, last week? And they had a big announcement. They were up 19% on the day. And their 30-minute RSI got over 80. So I felt like, you know what, with those two things in mind, as I have been weighing, I had been considering getting rid of my entire Marathon position because I have lost confidence in them, and I will talk about that more. As high level of conviction as I have in IREN, I have that low of a level of conviction in Marathon. So I thought about selling 100% of my shares at $14.30. I sold 20% of my shares. I'm not going to kick myself. I'm just happy I got 20% of it out of the way, and we'll see what my strategy has to be with the rest of this, because I do think these stocks move violently. So even if, the general consensus changes, or if Marathon has specific news, I do think I'll get another opportunity to get out somewhere in that neighborhood. But I'm getting out because I am now, the last time we had a live stream, I was green on Marathon. I'm red again on Marathon, life to date. So to me, that's the worst position in my portfolio. That's my opinion. We'll see what you guys think. And I have several reasons for that, and it's not just the price action, although the price action is very disturbing. Now, if I look at IREN, and if I look at a couple of things, it came within pennies of testing this line of support. it has gotten oversold now twice on the daily RSI in the last short period. It's actually at what is at 30.73 right now on the daily RSI. So under 30 is considered oversold, and I think, we'll see what happens. The MACD is a little ambiguous right now, only because, a lot of MACDs are a lot more consistent than this. Some, like back here, you had red turn into green, turn into red. Now you did a weird period here, turn into green, red, green, red, green, red. But here we've had dark red turn into light red, turn into dark red, turn into light red, turn into dark red. Then it looks like, when you have a run like this, it looks like you're about to have a bullish crossover and things are about to run. And then all of a sudden, you start to print red candles. Well, that's trending in the wrong direction. But I do think, even with that said, we're very extended. We're oversold. We're at a line of support. And for those reasons, I was willing to take a chance with some options. It may not work. We'll see.
What was last July like?
Last July? I don't remember off the top of my head. You want me to look?
Yeah. Because I'm trying to remember if it was really good. And I want to say that I think it was.
Let's go to the one. This is the S&P 500. We go to the 1 week. So this was, and this is similar time frame. Look at 2025. 2025, this year's, the end of March was the bottom. Last year, the first week of April was the bottom. This was a V-shape. Remember, this was tariff day or whatever they called it, and the market got destroyed. I mean, this was ridiculous. Market was down 20% pullback in a super short window of time, an absolute textbook V-shaped recovery, and from that V-shaped recovery, we took off. So,
when was that roughly?
What was July? This candle right here is the last candle in June, and the other one I'm circling is the first candle in July.
Okay.
So, we did have a nice uptrend, but then we had a bad week. But, we uptrended all the way until the end of October.
Well, I think that's what it's shaping up to be, personally.
That would be nice. An election year makes things maybe different, but maybe not. We'll see. A lot of this year is going similar to last year for similar reasons and some different reasons.
Okay to pray for a rate hike? Rate cut?
I'm not sure that's what prayer is for, but you are all free to pray as you will. Sour Melon Gaming saying, Tom, rate your level of conviction on CleanSpark on a level from IREN. I assume IREN being, let's just say for the sake of argument, IREN being a 10 and Marathon being a 1. I'm actually pretty bullish on CleanSpark. So I'm going to say a 7. I would say they're not an IREN by any stretch of the imagination, and I think they're going to have slightly different business models. I think out of all these stocks, I believe that IREN is going to be a neocloud provider, meaning they're going to run the full gambit. They're going to have machines, and they're going to rent compute. I think that CleanSpark and most of the other Bitcoin miners are going to be landlords, and they're going to rent power. And it requires less capital, and It's a good business. It can be a very profitable business, and I think they all have a clear path to get there. I think that a couple of them, IREN for sure, I think are trending more towards NeoCloud, where they're going to build out the whole stack and they're going to rent compute. And I think they know how to. They have been telling us for years. There were times they were telling us this that I was getting sick of them telling us this, because as a Bitcoin mining company back in the day, I felt it was important they focus on Bitcoin mining. But all they wanted to talk about is, listen, we're data center experts. It's what we do. It's who we are. It's what our background is in. It's where we excel. And that's what we're going to do. And whatever brings us in the most revenue is where we're going to go. At the time, they were a pure play Bitcoin mining company, but they made it clear on every conference call, every earnings report, that we are a data center company. Again, to the point where at one point they led the conference call by saying we are not a Bitcoin mining company. And I was actually annoyed. But I think they got that one right. So they knew I don't know if they knew, but they felt this is what was coming, and that's the message that they were delivering. They were a little early delivering it, but you know what? They got there. They now have contracts with 2 of the 4 largest companies on Earth, and my conviction in IREN is extremely high. They're ahead of everybody else, but CleanSpark just got a very nice deal, which we're going to talk about because that happened this week. And I can have a lot higher conviction in CleanSpark today than it was a lot harder to justify last week before this announcement, because this was their first contract. And when you see what their stock did on this, you're going to see why I think things are ridiculous right now. I want to go, while we're on that, I want to go show you what happened. What happened there? So this came out. I think
new poll up just so you guys know.
Let's see the new poll. Which company do you think will pull a 10x first? CleanSpark, Hive, IREN, or Riot? Interesting mix because they're all at very different points and market caps. Okay, so CleanSpark. We have had talks at great length on this very stream that CleanSpark has proven nothing. They have no deals. They have no proof of concept. That argument is gone. On July 14th, CleanSpark headline, CleanSpark secures 20-year lease with, quote, high investment grade global technology company for data center in Sanderville, Georgia. 20-year triple net lease totaling $6.6 billion in contracted revenue, with up to $11.6 billion after full extension options. So I'm just going to spend a second talking about that. This is a triple net lease, which essentially means they will be what I was just talking about. For this particular, it's 175 megawatts. So this is not their entire universe, but that's a fairly significant deal. For those 175 megawatts, they are going to be a straight up landlord. It's a triple net lease, which means the tenant is paying for essentially everything. So these are unbelievably high gross profit deals. So this is a fantastic deal. The one thing I will say is it is with, quote, a high investment grade global technology company, end quote. There is a difference between saying, I got a deal from Meta, I got a deal from Google, I got a deal from Microsoft, I got a deal from NVIDIA, and saying, I got a deal from an investment grade global technology company. Now, there are a lot of reasons why some companies, we may never know who this company is. Some companies have a confidentiality agreement built in. They don't want that disclosed for whatever their reasons are. So we may find out a month from now who this is. We may never find out who this is. it does hurt a little bit that we don't know who it is. And, you know, the uncertainty, the market doesn't like uncertainty. So that is a piece of uncertainty. However, this is a big deal. And then it goes beyond that. The tenant has executed a letter of intent and exclusivity arrangement covering CleanSpark's entire Texas portfolio of 885 megawatts, almost a gigawatt. Actually, put together, that would be over a gigawatt of leased power data center. So, you know, that's a letter of intent. That's not a deal yet. But, you know, that would turn this into, you know, maybe a $50 billion all-in type of a contract if it gets to that. Now you're on an entirely different level. So you've got a potential news story. You don't have to think about rumors or go to StockTwits. Like, they're telling you there's a signed letter of intent for 885 megawatts of portfolio here. So that gives a much higher probability that there's more news to come. In addition to that, by this company locking down all of CleanSpark's capacity, this is a signal to me, whereas everyone in the market is telling you, oh, Meta's going to rent out data. This is where it all started, and this is why the entire AI infrastructure has collapsed, and literally trillions of dollars of market cap have been lost in a 3-week period, because Meta said, we're going to rent out compute space. So the market, by extension, said, well, if Meta's spending all this money, $145 billion this year, building compute space, it seems like they've overshot, because now they're saying they don't even need that space. They're going to lease it out to other people. So there's now, instead of energy being arguably the biggest bottleneck in all of the AI play, the meta narrative says it's really not a bottleneck at all. In fact, it's just a matter of time before we realize we've dramatically overbuilt. This will all be commoditized and be worth very little. And it will be hard to make any money at this at all. We need to price these down to companies that are losers, not winners. And that's what's happened in an instant. I don't believe that narrative. We've all looked at the math. If you dig into this, you can make your own conclusion. The chances that there's an excess of data center space in the next 4 years is so small, it's not worth discussing, in my opinion. So we can do a poll on that and see if you guys agree with me or disagree with me. But to me, if somebody said that to me, I would laugh at them. If I had heard it for the first time and they said that to me, I would laugh at them, assuming they were joking, and then they would get mad at me and I would say, I'm sorry. But that's such a ridiculous statement that I can't believe anybody would say it seriously.
Isn't that funny? We talked about me writing a letter last week. I'm glad you remembered that, Doug. Remember? I said, why don't I just write a letter of intent? Let's see if we can do something. So, Tom, if that executes with CleanSpark, even if they never say their name, I pick them to be my 10x, just so you know.
If this letter of intent turns into a contract in the next 180 days,
right,
CleanSpark should go ballistic. Because now the argument that there's too much capacity doesn't even matter, because they will have leased out a gigawatt of capacity.
And then where do you sell, though? That's my question.
At what price do you sell?
Yeah.
I mean, you gotta. That's everybody's personal decision. You gotta have a plan. When you buy the stock, are you looking for a price target to exit at one point? Are you looking to, I try to dollar cost in and dollar cost out. So if everything goes perfectly, that's what happens. It doesn't always go perfectly, obviously. But that's my plan. And, everybody's got a different number. So I don't want to tell people what number to do that at. And a lot of it depends, is your cost basis for CleanSpark $4 or $17? That's going to have a big part of the decision on when you want to sell.
Well, the reason why I say that, though, Tom, if you read this properly, it's a triple net. I mean, you're talking just printing money.
You're exactly right. They will mint money off of this lease. This is basically this is the highest margin stuff there is.
But I mean, I could see this getting like just humongous. I mean,
right.
That's why I'm saying where do you sell? And this is the reason why I did my 10x on which company. I think it's going to either be IREN or CleanSpark. But IREN's got a little bit of a head start, and that's the only reason why I didn't pick IREN.
I just want to read what Sourmelon Gaming said because this is valuable. Matt Schultz was asked on the CleanSpark call Monday how long the letter of intent period would last, and he said 30 to 120 days. So I guess the clock is ticking. If this hasn't come to fruition in the next 4 months, then it sounds like it's off the table, which makes sense from CleanSpark's perspective. You do not want to have an open-ended letter of intent that locks up all of your and there's probably a right of first refusal and all those other things so that they could do something else if they wanted to anyway. But thank you for that info.
Do you think that if it's wrong, it could be like devastating, like lose half of your money?
What?
If all of a sudden they don't get the letter, nothing comes to fruition with a letter of intent.
The market priced in. Here's what the market priced in for the letter of intent. I know exactly how much the market priced in to the stock price for the letter of intent. 0.0, nothing. I also know how much the market priced in for them getting their first deal, which is a $6.6 billion 20-year triple net lease. The market priced in 0 for that deal. Because if you look, I'm going to cheat ahead. Oh, sorry. 1%. CleanSpark's up 1%.
That thing's got to run next week, Tom. It's just got to.
This is what I'm saying. We've gotten to places that are stupid. This is a stupid place.
One of the biggest probably announcements of the stock market, honestly.
It's the biggest announcement in CleanSpark history, and there's no contest. Yeah. Nothing's in second place. And their stock went up, by the way, after being sold off viciously. So it was in a position to run up. It's not a sell the news situation where, here, in July, where are they? Sometimes my eyes just can't. Here we go. They're down 10% in July. So better than a lot of the competition. July's been a nightmare. How about June? So here's a company that CleanSpark was down 20% in June. On top of that, they're down another 10% in July. They're a company that's never had a proof of concept of their business, just got their first contract, and it's a winner. I compared price per megawatt to the other companies that have gotten similar contracts in this space that are on this list, and it's a little bit higher than all the other contracts that have been written. Now, it's in the same price range. So, it's not out of that range, but it is at the top of that range, meaning this is a really good contract on a stock that's down, 30 or 35% recently. And instead of people running it up, on an opportunity where the stock's way down, this is what they did with that news. It's up 1%. So they priced in nothing for this. CleanSpark got nothing, no credit for this at all. I guess you could argue they didn't go down another 20%. But that's not how this works. This stock should have run. I'll tell you this, in pre-market, it was up over 20% on the day of the announcement. So it lost all of that. All of it. Well, 19 of the 20%. Got 1%. So to me, that's why I give such a high level of conviction to CleanSpark. This is as you identified, a triple net lease. It's a 20-year lease. There's a chance that this thing becomes even significantly larger than it is, but that notwithstanding, just this news alone changes the very nature of how you have to look at CleanSpark. And over the years, and we've been doing this for a lot of years, right? We've been looking at CleanSpark since the day they mined their first Bitcoin. So we've missed none of the journey. They have been, in my estimation, they are somewhere between an A and an A+ at execution, at staying on schedule, at building things out, and beyond that, at running things. So this is a company that's had phenomenal execution. You can question a couple of things people like to nail CleanSpark for. You can question their judgment. You can question their compensation. They bought a jet. Those are different things. From an execution standpoint, for me, CleanSpark's an A. And there's only maybe 3 companies that I would give an A to on execution. And CleanSpark has proven they're one of them, right? They ramped up to 50 exahash. And when they came out and said, I laughed. I'll remind everybody. They were a small Bitcoin mining company, and they came out and said, we intend to be one of the largest Bitcoin mining companies in the world. And I laughed at them. Because at that time, and I did the same thing to IREN, by the way, and IREN, the only company I know that executes better than CleanSpark is IREN. They went from 5 to 50 exahash. I blinked, and that happened. So those 2 companies are outstanding at execution. CleanSpark said they were going to do that. They did it. It was virtually on time, within the margin of error of on time, which in this business is almost unheard of. The only thing that's more unheard of is IREN actually finished ahead of schedule. So that's why I say, from an execution standpoint, it is really hard to argue with those. So my confidence that they will build these data centers, they've got them leased. I have a high level of conviction in this company. That's me. It looks like from the vote, a lot of you guys do too. Vote if you can. There's a lot of people that haven't voted. And if you could be so kind as to smash the like button, it would be greatly appreciated.
Stating, yep, maybe 90. Hang on.
All right.
89? Sorry,
Somebody,
I'm getting ready to buy some CleanSpark.
I love when you do this. This is the 3rd or 4th time you've been compelled enough by a conversation from the group that you've decided.
Yeah, no, but I'm using money I shouldn't use, but
That's fantastic.
don't tell my wife.
Yeah. Well, don't let her watch the stream.
She just said, I can hear you. No, but how in the world? I mean, come on, guys. Tell me I'm an idiot, please. I'm okay with it. But convince me not to make this deal, please. But it just seems like this is a gift.
I'm not going to argue against it.
No, I mean, I am serious. I don't know, for me, and like, I was pulling up all the pictures and everything I've done at CleanSpark and everything that, I've been a part of. And it's just like, you can see it, you can smell it, you can touch it. I've talked to Matt. I've talked to the old dude.
You walked their facilities.
Yeah,
you did the whole 9 yards. And you saw firsthand, these guys, they execute. They do. That's.
And here's the thing. I could call up right now and be in any one of their facilities tomorrow. How about that? And I mean, did you know that? I mean, it's just how it is. And we could go and tour anything. I don't know if I could do that with IREN. I don't know if I could do that with anybody else but CleanSpark.
Yeah, they have a very open door policy. I suspect the companies that are great at executing are glad and proud to show you what they do. And we're
talking clean rooms. We're talking, very, I mean, everything that I know of, they're doing it right. And I'll be the first one to tell you when they're doing it wrong. Trust me, I'm not. I don't have any problem.
CleanSpark has had a big sell-off, not as big as some of the other companies, but I don't think its price makes any sense. I mean, we'll move on after this. Let's take a quick look at their chart. This is at $13.
No, but here's the thing, Ace. That's a great. So I always say this. I always say it's fluid. Everything's fluid. You don't have a deal. You don't have a deal like this come on very often. And when you have a deal like this come on, when basically they decided two things. One, they're going to take Sanderville, which if you've seen it, it's just unbelievably big. And then the other one is that they're going to take everything in Texas. We all know who it is. It's Meta. Somebody wrote that in there. We can almost guarantee it's Meta but there's a high probability it's Meta. Okay.
The compelling case that it would be Meta is they would have an incentive to not disclose that.
Right.
Because they're busy trying to tell people there's too much capacity. So for them to turn around and rent capacity from somebody else would be a very bad look for them right now. So I don't know who it is, but yes, they would have an incentive to say, non-disclosure agreement. You can't tell anybody who this is.
I'm just gonna, but I've been out. So for the 10K challenge, I have a whole bunch of CleanSpark, and I think that what's crazy is with that 10K challenge, it's at like $4,700 right now, but at some point in time, it's gonna go crazy. Because it's like Tom said, we've been in since day one of Bitcoin mining with CleanSpark. And it's just a matter of time before it gets to where it's going. And when you start talking about seeing that, we're talking billions. We're not talking millions anymore. And it's like printing money when the triple that. Oh my goodness.
Yeah, that's going to be minting money. And if somehow the rest of that letter of intent comes through, I mean, you're talking crazy money. And I want to show you something, because here's the flip side of this. You've got a company that's trading at $3.3 billion. Right? They just signed a $6.6 billion deal. Now, it's a 20-year deal with the chance of getting to 11.6 without the letter of intent. It has the chance to get to 50 or 60 or 70 billion with the letter of intent. And it's a $3 billion market cap. To put it in perspective, companies that have similar situations. Oh, that's not it.
Do you understand now, Ace? Do you see why I'm making this irrational decision at this point in time?
CIFR's market cap is at 7 billion, much more than double Cleanspark's. I would argue Cleanspark in the big picture with this deal now is pretty substantially ahead of CIFR from the big picture. They both have their pros and cons. There's differences in what they're doing and where they're at. But if I had to judge, I would say Cleanspark's further along in the process. They got into AI much later than CIFR. So CIFR, and the next one I'm going to show you, TeraWulf, got into this, and they've done a lot more to convince the market that they are AI data center companies. That is the narrative that surrounds them. Cleanspark's only at the very beginning of that. But that's narrative. That's not underlying business economics. This company's more than double the market cap. And if I go to TeraWulf, this is a $9 billion. This is triple the market cap. And I'll tell you another thing. I won't do it right here, but if you want to go really compare these companies, go take a look at Cleanspark's balance sheet and TeraWulf's balance sheet. And then you ask me why one of those is 9 billion and one of those is 3 billion. It's a head scratcher. Cleanspark has been brutally held down. Let's see what, and this is not the most up-to-date place to do this, but let's just see. I know historically speaking.
But thanks, Ace. Anybody else got anything else to say about, what, if they think I'm stupid or not? I'm okay with it. It's okay. I kind of know I'm stupid, guys, so.
Hey, listen. Everybody's entitled to an opinion. So as of June 30th, 2026, Cleanspark's at almost 31% of the outstanding shares have been shorted. So, listen, don't expect that means there's a short squeeze and they're going to 10x. That's not how that works. This company's too big for that, but there's different types of short squeezes. This is not a GameStop situation.
When do you think the report comes out for the shorts for last quarter?
I mean, I think you can get up to date every 15 days.
Oh, really?
They give you their outstanding.
The big indicator would be how short Cleanspark is at this point in time.
I can tell you it's more short right now than it was at June 30th. And I don't have those numbers in front of me, but based on the behavior of the stock, it's more shorted now than it was when it was at almost 31%. This is a highly shorted stock. I'm just going to go through a couple of these because it's important. While this isn't going to be a 10x short squeeze, these shorts are going to have to get out of the way at some point. They're going to have to decide, looking at this chart, they now are in a position to decide. They're going to go, all right, maybe I shorted and I got my, I made my 30%. If they're hoping to get back down here, I wouldn't hold my breath if I were them. That is a wildly unlikely scenario. This is back on March 30th, where I told you guys every stock had their low. Well, Cleanspark's no different. So anything's possible, right? Enough money can push this around to do stupid stuff, but they're already 30% shorted, and they still sit up here. And they belong. I identified this range a long time ago, and that's where I thought they belonged in 2024. in 2020, I mean, for them not to be above $20 to me is wacko.
Right. And somebody just viewer D5T wrote, don't forget they have $1 billion in Bitcoin, leaving their $2 billion in M cap.
This is what I'm saying. Go look at their balance sheet. It's not just the income statement side. It's not just the deal flow. It's not just the infrastructure they've created. Their pipeline of energy is bigger than TeraWulf's.
I gotta go.
CIFRs.
Don't anybody buy CleanSpark right now, though. It's a good investment for me, not for you. See you guys.
Have a great weekend, George.
You too, guys.
So my point is, these heavily shorted stocks, while they're not going to cause the stock to run up 80% in one day, they are going to cause momentum to turn, and the shorts are going to have to get out. And that will drive up. Because remember, when a short leaves, there's one way to end a short position. You've got to buy the stock. So that's causing more and more demand. So now you've got people who want the stock having to buy the stock. You also have shorts who wanted to make money by the stock failing. Now they have to become buyers as well. And with 30% shorted, this could lead to a significant move upward. But to me, that's back where it was, $17, $18, $19, $20. You know, I'm not saying this is going to go from $13 to $30 overnight, but it does. I believe, unless you think that CleanSpark's going to fail and the shorts are right and it's going to zero, then being 30% shorted it's among the, forgetting nano cap and micro cap stocks, right? This is a multi-billion-dollar stock. That's among the highest in the entire stock market. And I think you're going to see Marathon isn't too far behind. I could be wrong. Let's take a look. Oh, they're not behind. They're ahead. Marathon's 32% shorted. So you guys might think that, oh, well, I guess that's just how the market works. But no, these are wild outliers. I mean, if you go to, this is all obviously a totally different type of stock. But if you go to Meta, and I'm just picking a stock, because that's the one that popped into my head, go ahead and put one. Anybody put one in the chat, and I'll go check it out. But don't cheat and set me up with one that's highly shorted. Meta's 1.5% shorted. 1.5%. Marathon's 32% short, which is why I think, even though I've lost all confidence in that company, I do think when market sentiment turns around, they will run back up into the $14 range. And I'm just telling everybody right now, I'm going to get rid of the rest of my Marathon when that happens. If I'm wrong, I'm wrong. I'm very heavy into companies in this business. To me, my lowest quality company, in my opinion, of them is Marathon. If they prove me wrong, then I congratulate them. I'm not rooting against them. I'm just assessing what I see. And to me, that's the one that I'm the most worried about. I would rather take that money out. I'm not going to fire sell it right now when it's down here, but I think in a reasonably short period of time, I'll get out at a small profit instead of being back in the red where I am again on this stock. And I can allocate it to some other companies that I have very high levels of conviction in. My watch list is growing and growing. I know that the stock market is fairly near its all-time high, but the list of stocks that have been destroyed, good quality stocks that have been absolutely destroyed, continues to grow on a daily basis. I will never be able to add all the stocks that I want to add on my watch list. It's just, if I win the lottery, I guess I could go do that. But there are just too many good stocks at stupid valuations. And it doesn't seem like that because, if you go look at the stock market, you think, here, if you go look at the SPX, not on the, I'm going to go to the SPY first of all. On the 1 day. So if you look at the SPY, and this is not a fair look at it, get rid of the volume, it just clutters things up. Right, the SPY is up from this, guess which day, March 30th. So, right, March 30th was the bottom. If shorts are hoping a stock's going to get back here, this was panic mode. So, we are only down 2%. The S&P 500 is 2% off of its all-time high. So now we are in a consolidation period. I think we're doing well. This is really sideways price action. That's a great consolidation period. Sometimes those look like this, right? And we didn't get that yet. Maybe we will. But the longer this does this, the more I think it's ready for the next leg up. But with that said, my point is we're 2% off of all-time highs, and I got more than 100 stocks on my watch list. Now, they're not all the same exact level of conviction. I've got different price targets. I had a stock, it was trading at $25 within the last 3 months. I said, if it gets to 6, I'll buy it. It's at 8 right now. So that's how dramatically these stocks are getting beaten up. So some of them have already reached my price point. Some of them have not yet reached my price point. Some of them have reached my price point, but they're lower level conviction than others that have reached my price point. So now I got to pick and choose. I can't buy them, right? You guys understand this. We can't all buy all of them. I see Joseph saying I might buy some IREN if it goes below 30. For all I know, it could. So I'm going to look at Keel because I see in the comments somebody mentioning right. And Keel, and then we're going to look at the chart because this stock's been abused. So my thing's showing 15% short or 16%. Somebody's finding, Tabby is finding information that it's 38% short. If somebody wants to dig a little deeper and double check on that, we can see what the short is on Keel. But I will tell you, last week I bought a bunch of Keel options and I averaged into them. This week I added to those positions because Keel is another one. I don't need to buy the next share. IREN's my biggest position. I think Keel's my second biggest. If it's not, it's my third. So I don't need any more shares, but I will take a opportunity where the market has just trashed this stock for no reason and see if I can't turn it into a few bucks without getting crazy risk. So if I go to Keel, right? I mean, come on. Again, this is June 22nd. That's less than a month ago. Off of today's lows, it was down 51% in 3 weeks. Well, just about 4 weeks. So that's crazy. There's no news. There was no news. The news is, here's the news. Meta is selling capacity, so AI data centers are dead. That's the news. That's why these stocks, that's the news. If somebody else wants to throw a news story in there that they think is adding to that, I understand there's other things going on, but that was the catalyst, and it's the substantial reason, and it's the narrative. Turn on any any investment program, any YouTube channel, just look up like AI trade, look up data center trade. They're all going to tell you that exact same thing. It's all over. Doug said, Tom, we're over 100 likes. What was the stock at $8? All right. Let's go there. Hold on. I don't remember the ticker. I'm going to double check it. Give me 30 seconds. I got a lot of... Hold on. Well, this is another. This is not the one I was thinking of. There's 4 or 5 that are close, but let me show you this one. And I'll try and find the other one as well. But for the moment, I'll show you this one. I mean, these moves are brutal. The stock that I was thinking of, I'm pretty sure was on my watch list of nuclear stocks. This is on my watch list of quantum stocks. Yes, I actually have a watch list of quantum stocks, even though I am not a believer in that technology. I think it's very narrow in scope. I think it's more hype than anything else. Having said that, you can ride the hype, and that's why I set very low price targets. This company... And you got to go back to, you know, if I'll go back from here. This was at $20 and now it's at $9. But back here, this was at $27. This is stock ticker INFQ. You can see this was a SPAC. So this traded, you know, at $10. And then, you know, they did the merger and it ran like the wind, which these used to do. They often do. But from that, we're down 67% right now. And this is another stock where you can see this actually has like, oh, what did I do? I'll just put the line right there. Like, that's it. That is the bottom for this stock. Now, I'm looking, there's some I'm looking to take out the bottom because this is a super new stock. I think this will get lower. I think this will get to 6 or 5. If it doesn't, I'm wrong. I mean, if you look at all of this, if you're interested in quantum, this is at 32 on the daily RSI, so it's getting into oversold territory. It's hitting the only line of support it really has. So if this was a high conviction play for me, I'd be buying it, but it's not. This, I will only ever buy this as a momentum play because you can see, look at what this does. Crash, boom, crash, boom, crash. So I'm guessing what's next is boom, but I don't, I am bad at holding stocks that I don't believe in. You got to know who you are and how you invest. I'll hold it if I believe that it's a good company and I've gone through and done all my due diligence. I will hold that stock. But if I don't think it's a good company and I strictly see a phenomenal technical setup, I will lose my conviction at the first sight of trouble. So I just don't do it. There's too many good stocks at good prices. God, I want to find that other stock. I should have put it on. Give me 10 seconds. Sorry, I know this is boring. I'll give up in a second if I can't find it. Well, let me show you this stock. This isn't it either, but this is a stock I own that I did not dollar cost average into this week because I think it's going to keep giving me an opportunity, and there were other things that I think are better. SMR, New Scale Power. Small modular reactors. This is a nuclear company. They are pre-revenue. It will be a couple of years before their product comes out. So these are companies that bounce up and down. But look at what this company has done. This was at $57. It's down 86.5%. So I've been buying this for pretty much this period of time. I'm in somewhere at like either just under $10 or just over $10. So I'm in the red on this, but I'm comfortable with where I started dollar cost averaging in. I think this is a stock I'm going to sell 2 or 3 years from now. So if I can double or triple my position in this in that period of time, because this goes lower and lower, which I think it will, then to me, that's a lot of the way I like to do this. I don't mind being early because I will not just put a chunk in and fill a position. I like to dollar cost average into a position. And if I'm early, right, and this is pretty good early because this is a lot of sideways action. Yeah, it's down a little, but it's trading in a range. And if it goes below that range, I'll buy more. I like what this company does. There's 3 or 4 companies that do this. There's 2 other ones that I want to buy. One's even more speculative, and one I'm waiting for a lockup period to end on. And I'll just tell you what those are as long as we're here. I will share. XE. These guys just went public, as you can see. Due to circumstances, they were able to accelerate the end of their lockup period to September 1st. I will not buy this stock until after the lockup period ends. Too many of these smaller IPOs at the end of a lockup period have a brief crash. Now, this stock's already taken it on the chin. This stock IPO'd in April. On its second day, it peaked, and it's now down 62%. So I've been watching this since its IPO, and I have resisted. I have not bought my first share of this. And it actually was not easy to resist because this is a massive pullback. But I am going to wait. This is another one I think it will get into the single digits, in my opinion, if and when we get to the lockup period ending. I think it's going to get down to the single digits, and wherever it gets to in the first 1 to 3 days after the lockup period, I will start dollar cost averaging into this stock. So I may not catch the bottom, but I think that's going to be the best buying opportunity for me. This is This is my favorite nuclear stock. I think what these guys are doing right here, X Energy, I hope that it works out, that this is one of my big positions 18 months from now. But they won't install their first sale until 2030. So again, this is super early. But they're ahead of a lot of other people, and they have some proprietary technology that I think is phenomenal. I think we've talked about this on the members only stream. We can go in more detail on the members only stream if you guys are interested, but I like this company. I think it's a good company. I'm not in it. I don't own it. I plan on owning it. I hope I get to buy a lot of it. We'll see how that goes. Let's get to some more stuff. We actually have a bunch of stuff that we have not gotten to yet. Oh, if you guys could please smash the like button, that would be greatly appreciated. We are over 100 likes, I'm told. I can't see that on my dashboard, which is so weird. I used to be able to see that on my dashboard. Give me just 1 second. If you just got a notice, I just sent a notice out to let everybody know we're live, because I have been told time and time again that nobody gets the regular notice for some reason. So I don't know why that is. It's a YouTube thing. So I just put a post out. Anyway, let's get to some other stuff, because I do have a lot left on my list. Just trying to pick what's next. All right. Let's go. We haven't taught, and we're going to spend very little time on this, because my guess is you guys have heard all you need to hear on CPI, but we should be remiss if I didn't even mention it. U.S. June CPI fell 0.4%, likely cooling the move towards Fed rate hikes. So you can see green, green, zero, green, green. CPI inflation up, 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 up every month. We pulled back this month. And if we go to, on a year-over-year basis, CPI was up 3.5%. The forecast, so last month was 4.2%. So that's a dramatic drop from 4.2 to 3.5. But what's more important than that, consensus was that it was going to come in at 3.8. Consensus on CPI data, for whatever reason, is usually incredibly accurate. 90-something% of the time, CPI data comes in at the forecast or plus or minus 0.1%. It's very unusual for a deviation bigger than that. This 3.8 came in 0.3% below that at 3.5. This was phenomenal news. And this is why George was talking earlier that the Fed has cover to lower interest rates if they want to. We got a much worse than expected jobs report and a much better than expected inflation report. That's the exact formula for lowering interest rates. So this is some of the reason I'm highly confident that they're not going to raise rates this year. Now, oil's jumped up a little bit. Geopolitical things have there's some more tension there. So we'll see what happens next month. But I don't think you're going to see big CPI numbers. I think having said that, I think it would be miraculous if we got a rate cut. The market's pricing in a 0% chance of a rate cut in the next meeting. So I'm not expecting it. That would be a gift. Let's see. Which company do you think will pull a 10x first? CleanSpark is winning 36%. IREN is in second place at 31%. Hive at 19%. Hive's a much smaller market cap, so there's some, that makes it a little easier for them. And Riot's in last place at 13%. So that's kind of how I would rank these, pretty similarly. So I think you guys, that makes sense. Thanks for voting. I want to do a little different poll than we did earlier. So earlier we asked the question, do you think that we're going to get a rate cut? I'm going to ask a different question. Do you think that we should have a rate cut? Forget what the Fed is going to do. If you were sitting in the top chair, what would you do? I want to talk about this because this is, again, goes to the market's just out of control. We're seeing things that we haven't seen. IBM, you can drop in the comments who else you think is in contention. I have 2 or 3 other names that pop into my head. I think probably IBM would be the number 1 blue chip stock in the history of the stock market, of the United States stock market. Give me some contenders in the chat, if you would. A couple other ones pop into my head that, there's no clear, definitely this was the number 1, but there have been some companies that, a lot of blue chip companies are gone. I grew up in a town that had a blue chip company in it, and they're not out of business, but essentially they're out of business, which is Eastman Kodak. They were once the 13th largest company in the world. They were money in the bank, and for all intents and purposes, they really don't exist anymore. They are still a company. They're doing some other things, but they were headquartered where I grew up, and it was inconceivable. They had tens of thousands of employees, more than that, in a pretty small area. And, I'm going to say millions of square feet of buildings. It was unbelievable. If you're from upstate New York, then you probably know what I'm talking about. And they're gone. So, blue chips, just because somebody's blue chip stock, technology can catch up to you and pass you. And they didn't keep up. And they were actually the first to have a digital camera. And they shelved it because Kodak made their money selling film. So the last thing that they wanted was a digital camera. But the fact is, once the genie's out of the bottle, it was inevitable that they were going to switch. IBM is a blue chip company. That is the perfect example of a large scale company having the money and resources to adapt. This is my argument about Micron. People think, well, it's secular or cyclical. So, Micron's going to fall off a cliff. Problem is, in the middle, they're going to make $500 billion. So once they do that, if their management is good, They will survive. IBM's revenue is 100% different than it was 50 years ago. This was a hardware company. This was the only name in computers. A lot of you are old enough to remember, this is it. You were IBM compatible. That was how it worked. Got to make your software IBM compatible, or it's, unless you're in that, what was at the time, the niche market that used to be Apple, which is now a giant. But at that time, it was all IBM. It was all IBM compatible. And they were a hardware company. Well, now they are not they don't have any hardware. They're a software company. They're a consulting company. My point is, this blue chip company that's been around for 115 years, this week had the worst day they've ever had in the history of their company. IBM stock craters 25%, the worst day on record, after the company issues second quarter earnings warning. But I want to show you what they did, because this is how much the market is wildly overreacting, in my opinion. Okay. The stock logged its worst day on record, sinking further than its previous worst day, October 19th, 1987. That day might ring a bell to some of you, because that was Black Monday back in October of 87, when the stock market had one of its biggest crashes in the history of the stock market. This being a Dow component, crashed accordingly. It was down 23.7% that day. That was its worst day in history. It hasn't had a day even close to that. Not during the financial crisis, not during COVID, not during any of the other, events that the market tanked or crashed. That's it. This company goes back to 1916. The tech company reported adjusted earnings of $2.93 a share on revenue of $17.2 billion. This below analysts' expectation of $3.01 a share. They were 8 cents under. And analysts' revenue estimate of $17.86 billion. So 17.86 was the estimate, 17.2 was the actual. That is a minor miss. I know we're used to a lot of these booming companies beating expectation and raising their forecast every single quarter, but not every company in the stock market beats and raises every single quarter for all of time. This is a near miss. This is a regular quarter. These are average results. And on that, the stock had the worst day it's had in over 100 years. Worse than that, the CEO blamed the shortfall on weakness in software. This is the story. The 2026 story, and it's changing at the moment because, well, I'll give you part 2 to this story. Part 1 of this story is, and it was really 2025, 2026 story. Software's dead. AI has come along. It is a new technology. Software is dead for 2 reasons. Number 1, you're just going to be able to do with AI what you could have done with software, so you won't need it for that reason. Number 2, even if you do need it, you're going to be able to fire half your staff anyway because AI is just going to do the work. So these companies sell based on number of seats. If the number of seats fall in half, then the company's dead. So it's double dead. So all software companies are dead. And basically, they all traded like they were dead. Software companies, and I bought a bunch of them, and I'll show you that list. And they're doing great now. This from a stock standpoint. So they had a tough day on this day. All of my software companies got destroyed on this news. And they made the CEO made the mistake of saying the word software, because this played right into the exact thing that everybody's been screaming at the top of their lungs. Software is dead. We told you software was dead. And look at what you did. You missed on revenue. you missed on earnings because software is dead. They missed on earnings by 8 cents. They did 17.2 billion in revenue instead of 17.8. I mean, these are very close misses. These are small. The market doesn't like a miss. The stock should have gotten beat up. The market doesn't like a miss. This should have been a down 3, 4, 5, 6% day. For a company like this, down 6%, that's probably one of its 20 worst days in the history of its company. Down 25%? This is what the market's doing. And this is why I have no problem buying the memory chips as they are crashing, because people are irrational right now. AI has turned the market into a continuous panic attack overreaction machine. And I think that there's going to be a payoff at the end of that. I don't know how long it's going to take, but I'm going to buy good stocks into weakness. And I'm going to show you, because this is the next group of stocks, and I'm late. I will tell you right now, there's people that became billionaires on this trade already. And to me, it's still early. And again, I will say, I'm going to talk about Micron in specific. And in the dot-com bubble, you know, one of the things we look at is PE ratios. That's one of the big ones. You look at revenue, you look at growth, there's a lot of data points to look at. And you look at price earnings. You look at price sales. In the dot-com bubble, there were 3 kinds of companies. 2 of those 3 kinds of companies did not have a PE. One of those kinds of companies was not profitable. So a company that has no profit can't have a price earnings ratio. They have no earnings. So that's a pretty bad sign to begin with. The dot-com era was full of those companies. That's not even the bad company. More of the companies that were up 1,000%, 2,000%, etc., they didn't have any earnings because they didn't even have any revenue. They had nothing. They had the measure that everybody was using to value stocks was eyeballs. How many users you got? Oh, you got 20 million users? Your revenue's 0? Well, we'll figure that out later. But you got 20 million viewers. We will figure out a way to monetize that, until everybody realized, uh-oh, the way to monetize that doesn't work. And I was heavily involved in this at the time, so I remember it quite distinctly. The concept was, you're going to get eyeballs, and I'm not going to belabor this. This is going to be quick. You're going to get eyeballs. Do you remember banner advertising? You still see some. This is a banner. Well, the way the internet worked in 1999, and I know because I did it, is you would get companies to put banners on your website, and they would pay you $10 plus or minus the going rate was $10 for each time that for every 1,000 times their banner appeared on your website. So $10 per 1,000. So you had to have a lot of eyeballs, and you had to have retention, because, you know, you needed people to move around and see a lot of banners. Well, that system was working until eventually people realized this marketing sucks, pardon my language. We're not getting any sales on this. We're getting duped. We're getting scammed, right? A lot of companies we're just artificially creating views and impressions. 1,000 impressions is what they called it. So in the span of what was maybe 2 weeks, that price went from $10 per 1,000 to 10 cents per 1,000. Stock market bubble over, stock market crash, NASDAQ falls. It takes 15 years to get back to where it was at the peak in 2000. That is not what's going on here. The company that I'm going to show you has possibly, if not the lowest, one of the lowest PE ratios in the entire S&P 500. It is hard for me to accept an argument that a stock is wildly overvalued and needs to crash at what is now somewhere around a 5 forward PE. If you guys can make that argument, let me know. I'll change the poll. Let's see. We haven't got a lot of votes on this one. Do you think we should have a rate cut this year? 85% of you think, yes, we should have a rate cut. The market is pricing in a 0% chance of a rate cut. I can almost assure you that the Fed watch tool changes dramatically, historically speaking. So I think as the months go on, that's going to change substantially. Remember, coming into the year, the Fed watch tool was predicting 3 or 4 or 5 rate cuts. So it went from predicting 3 or 4 or 5 rate cuts to giving a 0% chance of 1 rate cut. That's how much that can change. So relying on that tool off in the distance is unreasonable. Now, if it's 2 days before a meeting, that's usually pretty much the right number. It's locked and loaded, and that's what's going to happen. But a month before the meeting, 6 months before the meeting, a year before the meeting, those numbers are almost meaningless. So I point this out because this is, and did anybody give a shot? I don't see any contenders for. Am I too old? Do people not know what a blue chip stock is? Is that term gone now? Let me know in the comments. Did I get old? I'm going to end this. This is an overwhelming poll. Let me just get another one up real quick. I'm going to ask this question before I present my case for Micron. Okay, there we go. Do you think Micron is overvalued? Yes or no? And to put it in perspective, it is up. I'm going to show you how much it's up. It's up drastically. It's down off of its highs, but it is up. So to be fair, we're going to look at this whole situation. If I go back to April of 2025, so I'm now going back 15 months. Okay, 15 months. Yeah, well, we'll go to where it is today. It's up at 1,243%. At its peak, it was up almost 1,800%. So I understand at a glance looking at this and saying, this has got to be overvalued. It's up 40% 1,400, 1,500, 1,800% in just a little over a year. That's got to be overvalued. You guys already know my answer. And I'm going to talk about a lot more than Micron. This is a big part of what's affecting the market, and it's directly what's affecting all of our stocks. So if you're looking at an IREN or a CIFR or Keel or Hut 8 or TeraWulf, the very same thing that's affecting Micron's price is affecting the price of these stocks. They're on the same trajectory right now. And in my opinion, it's FUD. And no, I don't think every single one of these companies is going to win. They're not all going to be grand slam home run winners. There's very different business models within, within these different companies. They're diversified. They do different things. They're at different stages. There's still one of these, ABTC, that's a pure play Bitcoin miner. That's it. That's the only one. There's several of these that don't mine Bitcoin at all anymore, which is a good time to bring up. Let me just find it. This article came out on Monday. TeraWulf CEO, not all megawatts are created equally in the AI race. TeraWulf says its $19 billion AI hosting agreement with Anthropic underscores its transformation from Bitcoin miner to an AI infrastructure company. So understand, this was just last week. TeraWulf had a big announcement. Again, this is a very long-term deal, but it's $19 billion. We went through the economics of that deal. But my point on here is not that. My point is, let me just find it real quick. Reading between the lines. TeraWulf says Bitcoin mining is no longer part of its long-term strategy. Quote, this is a quote from the CEO of TeraWulf, Prager. We're not involved in Bitcoin. So for those of you that hold TeraWulf that think you are holding a Bitcoin miner, you're not. They're out. And that's okay. A lot of these companies are out. We know they're out. It's why the global hash rate is going down instead of going up feverishly. A lot of these publicly traded big companies, instead of doing the rest of their massive ramp up and making the global network even more unreasonable, they're actually decommissioning what they've got and retiring machines and getting out of the business altogether. So I don't know any more clear way to say this other than to quote the CEO of the company that said, we're not involved in Bitcoin. That's TeraWulf. And they're not the first ones to say this. And I think there will only be 3 or 4 companies that come out of the next halving still being involved in Bitcoin mining. Possibly 4 or 5, but I think most will be out and they will be focusing on AI. Many already are. So I think that's a trend. It's important to understand that is the trend. These companies are building their future on the thesis that AI is the future. That's why I'm talking about Micron. It is the poster child for AI right now. For many years, NVIDIA was the poster child for AI. They are the biggest company in the world. They're certainly a massive player in AI, but they're not the pulse of AI right now. Right now, it's the memory stocks. There's 3 memory stocks in the world. One of them, Micron, is a U.S. company. It's been traded in the U.S. for a long time. SK Hynix actually just did a public offering in the United States like 1 or 2 weeks ago. Prior to that, they were a Korean company. They still are a Korean company, but prior to that, they were not traded in the US. And Samsung's a Korean company as well. Those are the three players that make high bandwidth memory. Two of the three really aren't traded in the United States. I get access to them through an ETF called DRAM, DRAM. Not financial advice. I'm not recommending it. They're not sponsoring this video. None of that's happening. But that is what I added to pretty heavily this week as it pulled back dramatically. And I'll show you guys that chart because I'm getting in that, and it holds a bunch of other companies, SanDisk, a bunch of the other memory companies. But 75% of its portfolio essentially is those three companies. So I do hold Micron in specific, but I also hold the ETF DRAM because it gets me access to 100% of the high bandwidth memory chips. There's three companies, and that's the three main positions in that ETF. Just as an aside, let's take a look at this. Okay, so this is yesterday. This is a screenshot from yesterday. NVIDIA was market cap. Let me know if you can't see this. I can make it bigger. NVIDIA was, I think you can clearly see, NVIDIA was number one. They're the biggest company in the world yesterday. Market cap $5.023 trillion. Apple was number two. Market cap $4.894 trillion. This is a snapshot 1 hour before the market closed today. Apple, number one, $4.907 trillion. So they were both, well, actually, this was up 0.26% on the day, and NVIDIA was down 2.5% at that time. NVIDIA, number two, $4.898 trillion. I mean, you're talking fractional, minor differences here, but they did flip several times throughout the day. So 1 hour before the close, Apple was the biggest company in the world. For most of the last 25 years, either Apple or Microsoft has been the biggest company in the world. You'll see Apple is now bouncing between 1 and 2, and Microsoft's actually fallen to 4. I've been building a position in Microsoft. Again, they are being treated as a software company, which is nuts to me, and they have been sold off heavily because of their affiliation with software. So I expect good things from Microsoft going forward. That's a position I hold. I don't usually hold Mag 7 type stocks, but they were just giving this one away. Rather than having cash on the sidelines, I'd rather have had shares of Microsoft is the decision I made at that point. Okay, so that's with an hour left in the day. Now here's the end of the day. NVIDIA jumped back ahead. NVIDIA 4.912, Apple 4.901. So there's going to be a lot of flip-flopping. And I will tell you, for years, for a decade, Apple and Microsoft did this. Apple's the biggest company. Microsoft's the biggest company. Back and forth and back and forth. Then one would hold the title for 6 months or a year, and then the other one would catch up. I do think Google was in striking distance of this not too long ago. They've had a pretty big pullback. And Microsoft was the biggest company not too long ago. So I think you're going to see a lot of these top five here are going to be very competitive for the next couple of years, in my opinion. We'll see what happens. But there's a lot of trillion-dollar companies now. Micron just fell under $1 trillion, to put it in perspective. So they were $1 trillion company. SK Hynix is now under $1 trillion. AMD is under $1 trillion. To me, AMD, SK Hynix, Micron, those are all going back over $1 trillion. I have an AMD position. It's much smaller than the other positions. I'm not adding to it. I think AMD is very different than the other companies. They trade on a massively higher multiple right now. They're a different company, and I'll get into a little bit of that. And they deserve a little bit better price earnings, but not 5 times better. And I think there's some hype going on here, but I kind of bought this as a hype trade. I thought this stood a real good chance with AI doing what it's doing of having a big run up in a short period of time. I'm going to hold AMD for a short period of time. It's either going to go up and I'll make money on it, or I will stop loss out of it if it gets back to where, you know, I'm losing money on it, because this is not a high conviction trade for me like the other ones are. And that doesn't mean it's a bad company. What it means is PE trailing 12 months, 165. Now, to be fair, they're going to make a ton more money next year than last year. So if we go look at their stats, where that's where am I going? I use this on the phone 99% of the time, and the website just looks completely different. Here we go. Okay, so to be fair, this is a company that's going from earning $4 a share in 2025, $7.50 a share in 2026. So that's a big jump. And then $13 a share is their estimated forward earnings. So that's triple. So now, if you go back and look, their 160 forward PE is more like, or sorry, trailing 12 months PE. Their 2027 PE is more like 60. But 60 is still massive. The S&P 500 average is around 22, and Micron is somewhere around 5. So you're talking about the difference between a company trading at 60 2027 PE versus a company trading at 5 2027 PE. Those are very, very different things. And a lot of people will give you an argument why it's very obvious why that's the case. That should be the case. It makes sense. Micron's business, effectively, just to put it bluntly, the argument is the business that Micron's in sucks. It is selling memory. Memory is a garbage business. It's the lowest common denominator in computing hardware. It's very cyclical, and if you happen to have a good year, it's an anomaly, and you get no credit on a forward PE basis because one good year does not indicate any more good years. That is the thesis, and that seems like I'm using hyperbole, but if you ask any AI or if you go research this, you're going to get the exact story that I just told you. That is the thesis for Micron. I want to show you what Micron's doing now. Micron's trading at $848. Remember AMD was going to make $13 a share? We just looked at that. Micron's looking to make $150 a share. $150. They made $8 a share in 2025. That's what happened. And that was a good year for them. They're going to make $73 a share. They just made $30 a share last quarter, in one quarter. So this is very doable. They'll probably beat it. Next year, they're looking at $150. So 848 divided by 150 is 5.6. This company's trading at a 5 forward PE, which means the market thinks they're going to have this year, and then every year after that is going to be horrendous. They think $8 is what this company really does, and they will revert back to that, but they're going to have a couple of years in the middle that are spectacular. Now, we can't give them any credit for that because they're going to go back to $8 a share, and really they actually earn less than $8 a share on average. They're really probably going to go back to $3 or $4 a share. The problem is they're going to make hundreds of billions of dollars in the middle. It's a different company, right? You can't look at the company the same way anymore. They have the kind of money, and even more so in all likelihood, than NVIDIA has, than Apple has, than Google has, than Microsoft has. These are the most cash-rich companies in the history of the stock market, and Micron is going to join them. It's already happening. They just threw off $25 billion in cash last quarter. So as people continue to think, well, memory stinks and it's garbage, I view this differently. High bandwidth memory is a totally different animal. It is structurally different in every way, shape, or form. It requires a lot more precision. It requires a lot more material. High bandwidth memory is gonna steal all the material from all the rest of the memory. So you're gonna see memory go up in everything, because the high bandwidth memory that AI needs is going to consume the resources. By the way, the CEO of SK Hynix has already said, we're sold out through 2028, and we have no line of sight, was his words, to when supply is going to be able to catch up to demand for high bandwidth memory. So he's talking 2026 is already in the books, 2027 is a done deal, 2028's a done deal. Beyond that, he can't even see a time when they're going to catch up. Now, he's the CEO of a high bandwidth memory company. He's going to be optimistic. Supply will catch up one day, or at least it will not be so dramatically short in supply. Pricing will stabilize, but we're never going back to a time when they're going to buy this stuff for pennies on the dollar for what they're buying right now. And if we do go back to that time 5 or 6 years from now, Micron may well have made $500 billion or more in the middle. That money doesn't just disappear because the cost of chips change. So now, just real quick. So here's a chart. At this time, this chart's a little old. You're going to see Meta, 18 forward PE. At this time, Micron was a 9. We now just did the math. It's a 5.6. Meta's 18. Microsoft is 19. NVIDIA, 19. The S&P 500, which means pick a random stock out of the 500 in the S&P 500, is 22. Google's 27. Amazon's 27. Apple's 30. Apple's growth is like 10 or 15% a year. Micron's growth is 246% this year, compounded by another 80% next year. Now, obviously, that's not going to go on forever. That'll come back down to earth, but you don't think they're going to settle in at 50, then 30, then level off at 15 for a while. And then who knows, maybe 6, 7, 8, 9 years from now, this situation flips around. But stocks don't get priced for what's going to happen 9 years from now. Right, you can ignore a year or 2 years if you think they're an anomaly. You can't ignore a decade. So to my point, I'll just go through this really quickly. Apple's highest annual net income was $112 billion in 2025. So last year, Apple made more money than they've ever made in the history of their company. And again, Apple and Microsoft were the two biggest companies for most of every single day of the last 20 years, other than the recent change that NVIDIA reached that spot, and they've had a pretty tight grip on it until today, where Apple just caught back up to them again. So, okay, 2025 was the best year Apple's ever had in their history. Microsoft earned $100 billion. That's the best year they've ever had in their history. Apple's forecast for next year is $130 billion. Well, that's better. So they're going to beat the best year they've ever had in their history. Microsoft's forecast for next year is $120 billion. I'm talking about income, not revenue. Income. That's going to beat their all-time record. So in 2025, they're going to beat their all-time record for earnings. In 2026, they're going to beat that. In 2027, Apple's estimating $128.9 billion in net income. So that just about ties their record. Microsoft's forecasting $135 billion. That once again handily beats their all-time record. These are the two juggernauts of this millennium, really the last 25 years. These are the two juggernauts. 2025, they're going to beat their all-time record for earnings. 2026, they're going to beat it again. 2027, they're going to beat it again. Here's Micron. The memory maker, whose stock fell more than 4% over the past month, and now it's cratered since then, is projected to earn $83 billion in 2026. $83 billion. Right? Still a little behind Apple and Microsoft. And in 2027, $176 billion of net income. Far more than the best year Apple and Microsoft have ever had. Very close to, as of 2025, Apple and Microsoft put together earned about $200 billion. Microsoft's going to earn $176 billion just next year. I'm just trying to put in perspective the magnitude. People are being very dismissive. This is a stock that is universally hated right now in the moment. It's been loved for the last year. So it's had a massive run-up. But understand that run-up has run it up to a 5 PE, right? In the dot-com bubble, so I never got to the third kind of company. 2 of the 3 kinds of companies in the dot-com bubble had no PE because they had no earnings, and half of them had no revenue. This company is going to have $176 billion in earnings. That's more than every single company that crashed in the dot-com bubble, all added up, put together. And it's not even close. This one company, and they're not even the best in their space. Samsung's going to make more than this. The third kind of company in the dot-com bubble was the company that had somewhere between a forward PE of 100 and 1,000. Those were the three main stocks that made up the dot-com stocks in the dot-com bubble that ended up crashing. Does that sound like what's going on right now? Right, we just looked. Micron's already out of date. That says 9. Meta, 18. That's not 100. That's not 1,000. Microsoft, 19. NVIDIA, 19. These are all less than the average S&P 500 company. This is a little high. The S&P 500 is usually more around a 20x. It's 22 right now. It's 25 this year. Nothing out of the ordinary. By the way, Amazon, until 2 or 3 years ago, Amazon spent 10 or 15 years trading anywhere between 80 and 500 forward PE. It became a multi-trillion-dollar stock at over 100 PE. Micron's at 5. Now, they're very different companies. I understand. They should not be one for one. But is one of those companies 20 times better business model than the other? A lot of you think yes, because this vote is extremely close. So vote if you haven't voted. This is. Do you think Micron is overvalued? Yes is actually winning. So at a 5.5 PE, most of you think that Micron is overvalued. And drop in the comments if you think I'm wrong. I'm showing you the. If you think I'm wrong about what information I'm giving you, not about my conclusion. I'm showing you the information. This is the information. The question is, what does it mean? You can believe it means Micron's going to do great, or you can believe it means Micron's way overpriced and it's going to crash. That's a matter of opinion. But the numbers I'm showing you are, these are the numbers. Here. This is AI semiconductor supply chain fiscal year 2027 forward valuations comparison. So I went up and down the whole supply chain and picked 10 or 15 stocks. NVIDIA, forward PE of 27. AMD, a forward PE of 45 to 60 is what the computer, this was ChatGPT. And I went back and forth and had them fix a lot of these and gave them information. I pointed them to websites to go to figure this out because it was doing a bad job. So I took 10 shots at this before the chart you're seeing right here. Because we just looked, AMD's forward PE is much higher than 45 to 50. But let's even say it's 45 to 50. So 27, 45 to 50, Broadcom, Avgo. This is a $2 trillion market cap company. 28 PE. Marvell. This is smaller. It's like a $500 billion company. 20 to 25 forward PE. Taiwanese Semiconductor. I mean, these are ultra mature companies. A 20 to 25 forward PE. ASML. And I just want to read what they say here because this is an important distinction to know. I think this is overpriced at this point. But the case for this stock, ASML, is EUV lithography equipment monopoly. They have a piece of equipment that every single company on the face of this earth that makes a memory chip has to buy that from ASML. There are no other. So whereas high bandwidth memory has 3 companies that make, which is a very small pool, ASML has a monopoly. They're at a 30 to 35 to 40 PE. Applied Materials, 20 to 25 PE. Lamb, 20 to 25. KLA, 20 to 25. Now we're down in the supply chain here. Right? These companies supply these companies, and these companies supply these companies. The end of the game is NVIDIA and AMD, which sell to the end user. ARM. This is kind of a different company altogether. This is an intellectual property company, semiconductor IP licensing, 40 to 50 forward PE. So that's what the AI space is doing as a whole. Somewhere on the super low end, 20 to 25 forward PE. Most of these are in the 40 to 50 PE range, or many of them are. I circled 2 in red here in the middle. SK Hynix, which also makes high bandwidth memory, 8 to 12 forward PE. So that's already half the next closest one on the whole list. Micron, 6. Right? We just calculated 5.6, so that sounds about right. That's half of this, which is half of the next worst one on the whole list. This is what the market is doing right now. I think this is an anomaly. The market is saying, now, by the way, these historically speaking, these are the forward PEs that Micron and SK Hynix trade at. So it's not like they're low, they're lower than usual. What I'm saying is they now have a different business. If you don't believe that, if you don't believe that the nature of both the nature of the high bandwidth memory chip that they make is fundamentally different, and that AI is fundamentally different than any other supply squeeze we've had in the past. If you don't believe those two things, then you think that this all makes sense and that Micron should be valued very low. If you think one or both of those other things, then you probably think Micron's underpriced. My price target for Micron is 2,500. I can tell you, I'm certainly not holding it until 2,500. As soon as I pull, a triple on this, I'll start dollar cost averaging out. That'll be at around 1,500. And I'll be gone before it ever reaches 2,500. Right? That's my math, but I'm not. That's too greedy for me. Now, a lot of you might think it's at 848 right now and it's on the way down, so I'm never going to see any of those numbers. We'll see what happens. But to me, this is one of those that, and this is not the full supply chain. Understand, there's a lot more companies in the AI space than this. I just took a sampling of, each different type of company inside the AI space, all the way up and down the supply chain. So again, not the entire list. Okay, next question, and this is going to be a poll. All right, so do you think Micron is overvalued? I'll explain this next thing, and then I'll close this, and we're at almost a tie. So half of you think what I'm saying just does not make sense. And by the way, you're the half that agrees with the rest of the world. So I get it. My viewpoint is the tiny minority viewpoint on this issue. I will also give credit where credit is due. Michael Burry, who you guys probably, a lot of you recognize his name. He was the Big Short, right? He got famous. They made a movie about him. Well, subsequent to that, for those of you who have been paying attention, he has called the end of the world on almost every industry and the stock market in general time after time after time. He's the most bearish person I've ever seen in the stock market. Well, he shorted Micron. And I did say, one of us is going to look smart and one of us is going to look stupid. Well, as of today, Michael Burry shorted Micron somewhere around $1,200. He almost rang the bell at the top. In fact, his short probably did ring the bell at the top. So he's already had, he could get out of this trade today and he wins. Right? Let's say he bought it. This was the day he announced. If he sold it right now, he's up over 30%. So if that was his intention, if that's what he meant by shorting this, is that, look, this thing has run too far, too fast. Even if I think it's a $1,500 stock, the next move is to the downside. Well, then he was right. That's a substantial move to the downside. It's also why I've dollar cost averaged in. To the bottom, this was down 35 from the top to the bottom, actually. The bottom being earlier today. Micron's move is down 36%. So Micron was out of reach for me for a long time because I was buying in the 300s. I was buying in the... I skipped this. I bought in the 500s. I bought in the 700s. And it's real hard for me to buy, at 1,200 or at 1,000. But when this dipped back into the 800s, I did buy some more. Now, I bought a bunch more DRAM. So I'm getting exposure to Micron and I'm effectively buying it another way anyway. I'm just going to show you guys that because it is the main trade I made this week. Right, this got up to almost $82. June 22nd. To the bottom today, this was down 40%. So as soon as this got down about 25%, I did several purchases between down 25% and down 40%. So I did a bunch of dollar cost averaging here. And I was later to the party on this than I was on Micron. So I'm in the neighborhood of break even on this right now. So I'm anticipating this to go up substantially from here. And again, this is all three companies, SK Hynix, Micron, and Samsung, as well as a bunch of other companies with, 2, 3, 4, 5% of the fund. Let's see. All right, so we're going to end this. So this is now... I'm going to end this poll. I'm going to call it a tie, even though... Do you think Micron is overvalued? No, 54. Yes, 46. So no did end up winning, but for the majority of the time, this was either a tie or yes was ahead. So this is a very, very, very close argument. So we're going to keep our eye on this. It's obviously, for me, now turned into one of my larger holdings between directly owning Micron and owning it through DRAM. This has turned into a bigger position for me. So we'll see if I've hit or missed on this one. These are my software companies. ServiceNow, Salesforce, Intuit, Adobe, and I'm calling Microsoft a software company only because for the last year it has traded in hand in tandem with the software companies. And I just want to go to this stock for a minute because this isn't a little pullback. From October of 2025, now most stocks peaked in October of 2025, not just our stocks. All of our stocks did. The market kind of did. So Microsoft, from the top to the bottom, that's a 37% move down for what is now the fourth largest company in the world. This is a company that I just showed you. This year, next year, and the year after, they're going to have net income of over $100 billion. And this stock was crashing. So I bought, and I really mostly bought here and here. So my cost basis on this is low. So, and again, I'm treating this like a super high yield money market. That's how I look at this stock. This is as asymmetrical a trade as I think you can get. I think the downside is so minuscule on this, and I think it's more likely to ultimately go back to its all-time highs. That's my opinion. So far, the market disagrees. Although it's up quite a bit from where I bought it. I mean, this got down to $349. And I think I'm averaged in the 350s. So I did a couple of buy-ins and it was really at the bottom. So, and it's not a monstrous position. It's a medium-sized position for me. Some of these other ones, I will tell you, my ServiceNow and my Salesforce, these are top 10 positions for me. These are big positions. I have a high level of conviction in these two stocks, and I'll show you. I'll go through these as well. This is Salesforce. Salesforce was down 60% in a year and a half. Even if you go from January, so just the first half of this year, it was down 45%. I mean, this stock was getting crushed. I feel a little bit lucky on some of these because and this is not, I just showed you for DRAM, I've done several dollar cost averages and I'm only break even right now. If that thing goes the wrong way, I'm going to lose money. But I was pretty fortunate on these. I bought here, here, and here. And I built a nice position down at these numbers. And my position is full. I don't need any more. It's like I said, it's top 10, it's top 7 position for me. It's still very low. I mean, this stock by no means has proven itself. This stock is still down. Still down 54%. It's a train wreck. So if you like this stock, you're certainly not too late. It's pretty much been a train wreck for the last year and a half. I think this software is dead story for the right companies. There may be software companies that get hurt by AI, but there's also a lot of software companies that are integrating AI or that actually are useful in the AI environment or that are selling AI themselves. And those are the companies that, in my mind, There's no reason for them to be down 40, 50, 60, 70%. That was that. I don't have to guess on this one. That's where I started ServiceNow, and I built a position quickly. And again, I got lucky because this ran up huge, and I did not chase it because this is about as fast as I've ever built out a position. And then I did buy some more when it hit here. So this is another one where I'm very fortunate. I'm in this at a very good price as long as it goes up. Listen, if these stocks are dead, if the market is right and software is dead, then it doesn't matter that I bought them at the bottom because it's only the bottom for now and it'll get worse. So we'll see what happens. Intuit. Intuit is TurboTax, but more importantly, a lot of people don't realize this is QuickBooks. This was down almost 70% in less than a year. That does not make sense to me. And again, this is another company that reported, they had a quarter where they reported very similarly to what IBM just did, which was they had a very small miss. And look at what this stock did. It was down 28% in like 2 days. And remember, it had already been crushed. So it's not like this stock had run up huge. They missed on earnings. So, it was time to dump this stock. No, the stock had already been dumped. Stock was already down almost 50%. So we'll see. I'm building out. I will continue to dollar. Now, ServiceNow and Salesforce, I'm done. My positions are full. If the opportunity presents itself, I'll buy more into it. I'll buy more Adobe. If Microsoft pulls back again, I'll buy more Microsoft. We'll see what happens, but that's it. That's a bunch. There's other good software companies. To me, these were the easiest picks. Nothing's a given, so you never know. Last thing. I was going to put up another poll. I want to show you two other companies, and then I'm going to ask you guys and get a sense of what you think on this. And then for the members, we'll talk about this on the members and make the final decision. Are you guys interested in adding these to the list? These two companies are very similar to the list of companies that we look at. We used to have a list of Bitcoin mining companies. We really don't anymore. So these two companies, and I'll just show you real quick. This is the investor presentation for Applied Digital. And just to understand, tenant profile, Microsoft, Meta, Amazon, Google. Who's this? Oracle? Who's this? AI data center expansion. CoreWeave signed 3 15-year leases with 5-year options for 3 buildings, utilizing 400 megawatts of critical IT load. So you can see these companies are doing the exact same thing. Now, they're further ahead in the process to some extent. So look, if you look in total, 4 DC sites successfully developed and deployed by Applied Digital, approximately 500 megawatts previously constructed capacity by Applied Digital, 75 years of experience, great. Greater than 750 megawatts of previously constructed capacity by construction team. So they have more deals, but it's not like to scale. This is a massively larger company than what we're dealing in. Somewhere I think they give here. Applied Digital is positioned for growth. Total 1.4 gigawatts, 1,410 megawatts. Well, that's less than IREN. Most of our companies have somewhere between 1.5 or greater than 2 gigawatts that they own at various stages of construction, and then a pipeline beyond that. So this is very similar to what we're doing. This was never in the first place because these guys, they weren't a Bitcoin miner at the time. And then CoreWeave, large and growing footprint of AI data centers, 850 megawatts plus of active power, 3.1 gigawatts of contracted power. This is the big dog. I mean, it's still not magnitudes bigger, but they have more deal flow. They started earlier. But from a gigawatt standpoint, these guys are all in the same ballpark. It's just CoreWeave had a much bigger head start. But the same is true inside of the stocks that we look at. Some of these started 2 or 3 years ago. Some of them started last year. Some of them just entered in this year. So, we have stocks at varying stages. I think the answer is nobody cares because there's a total of 4 votes on this right now. So speak now or hold your peace, and then we will talk I see Sour Melon Gaming, you're still here, and Doug was here a few minutes ago for the members. We'll probably make a final decision on the members only as to whether or not you guys care about these being added to the list or not. But at this point, I feel like they are very much apples to apples companies. So it's worth the conversation. All right, so Bitcoin's kind of hanging on. It's a little under 64,000. It did get up over 64,000 today. And, you can see in the middle of the week, it actually got up to a high of 65,559. So last weekend, I said the goal was we really need to hold 60 and see if we can take the next leg up. Well, we did that. I'm looking now, if I go to the 1 day, what I'm looking at that's going to be really the next deciding factor is we got to 67,264. So to me, we got to take out this line right here. If we do that and set a higher high, right? We had a high here. We have a higher high. We'll have taken a massive first step towards moving back into a bull market. I'm not saying we're there. I'm not saying we're going to get there. But that would be one of the big boxes that you would have to check to start being on the path for a longer term bull market. Now, I know a lot of people think we still have many months to go before that happens. This test may fail. We'll see what happens. But for now, we certainly want to stay above 60. And I'd like to hover around 64, 65 so that next week we can make a run at taking out this previous local high and start to set higher highs. Higher highs, higher lows, that's a bull market. So that's it. that's all I got today. Oh, I went really late today. I hope you guys enjoyed this. Hope there was some valuable information in there. Thank you, everybody who joined us. And if you have not yet, you can smash the like button. It still does help on the way out. If you're new to the channel and you enjoy this, please feel free to subscribe. It's free and it does help the channel. So, and for those of you interested, we have about the cheapest membership program in the world. And we meet every Tuesday after the market closes. So thank you very much to everybody. Special thanks to the members. I will see the members Tuesday after the market closes. And to everybody else, I'll see you next Friday. Go Bitcoin and have a fantastic weekend.